No worries. Hello, everybody. We are back.
Awesome. Can you hear me clearly?
Yes, I can hear you very well, Walter. How are you doing today?
I'm good, thank you. How are you?
Yeah, all good, all good. Yeah, we've just gone live. We're going to wait for the viewers to come in. We've got another interesting trading session up ahead. Hopefully, we got some good trades coming in this session. But yeah, how's your trading week been so far, Walter?
This week has actually been a little bit rough compared to the last few weeks. But yeah, it's been a bit of a rougher week. So yeah, I'm literally just like being patient, riding it out until calmer waters. Hopefully, week ahead. What about yourself? How's the week been?
It's been better than last week, that's for sure. So far, every trade I've took has been good. But yeah, it's still a bit. It's just because we're. I mean, the S&P 500 looks like it's stabilizing a bit now. It doesn't want to drop anymore. We're in a ranging market since yesterday, so yeah, hopefully there's a bit of a correction, and we start seeing again pushed up a bit now. But anything could happen. It's been a bit easier than last week. Last week was just a bear market. Just boom, boom, boom. There was no opportunity to buy at all. Well, I mean, there was, but it would have been very dangerous at the time.
I mean, did you look for any sell opportunities at the time?
It just didn't have a good enough pullback. I caught like a couple. I caught one in the live session last week on Friday, but yeah, a lot of them it was just so much momentum,
Yeah.
And every time it did pull back, it was like in the Asia session, and by the time I already got on the screen, it was kind of a bit too late,
Yeah.
So it was one of those where it was just I couldn't catch it right. But it's looking better this week. This week for me is definitely looking better, so I'm thankful for that.
That's good. I'm just waiting for all the news to get out of the way. I mean, we had PPI a few minutes ago, and then we have a Michigan consumer sentiment taking place tomorrow. So that would be like the main one, and then of course, like next week Monday, there's retail sales, which hopefully shouldn't be that much of a. There shouldn't be that much of a big market impact from retail sales. But that's like the main. I think that's like the last of like the red news event. So. Yeah, after that, hopefully we should be seeing more stiller waters. Gold has been consolidating predominantly this past few weeks. That's why it's been a little bit more challenging. But yeah, just can't wait until all the red news data have been released over the next few days up until Monday.
Yeah, no, absolutely. But yeah, fingers crossed. Hopefully, things start picking up a bit. But for all the viewers. If you are in, drop a comment, say hello, make yourself known. It's always good to interact with everyone watching. Doesn't matter which platform you're watching it on. If you drop a comment on that platform, we will be able to see it. Okay, so feel free to drop any questions, comments, etc., and we will address them in due course. But yeah, I'm pretty happy to start jumping on the charts. If Walter, if you want to go first, be my guest.
Yeah, I mean, I'm happy to get the ball rolling. I don't mind either or. But yeah, 1 second. Let me just. Hopefully, we don't have any funny business today with the whole sharing screen situation. It's just the both of us today. So.
Yeah.
Oh, that seems to be fixed. Awesome.
Yeah, in the last few sessions, it's been good. So fingers crossed we don't have any technical difficulties again.
All right, so yeah, I'll just quickly talk about what I'm looking at on gold. I've just shared my screen now. But yeah, so this week has been interesting. Today is like the day where actually I've broken even and things actually picked up today. But I did start this week, Monday, for example. So if you just look all the way down here, yeah, so Monday was a bit rough because it's not even about the right direction. It's like I got the right direction, but price was just like whipping up and down. So yeah, so I would get like stopped out, and then price would then run in my favor, and then after that it's like it's too late. It's only yesterday I finally was able to get a good trade in, but like you can imagine, like my Asia trade didn't work out. I was stuck in this range for literally up until London, and then London I got stopped out because I was in a long. Then the market came down. This wick basically took me out below this low before market rallied, and then I was able to then. So when the market came down to basically retest this 800 EMA, I was able to get another long position in. I held that overnight. This morning woke up to a TP, and then today was again just a bit of an interesting one because Asia session I took a loss from sort of like. So initially, of course, I was anticipating that continuation into the H4BST. So if I just look at the bigger picture, show you the bigger picture, the general idea is gold is about to make a new all-time high potentially. But my target was H4BST, and then there was like on the lower time frame, there's an imbalance, which is this line, and then this is a short-term high on the 30 minutes time frame. And then after the short-term high, it's obviously the highest high at 2.95. So yeah, so it's like it's been bullish directionally, but the bullishness hasn't sustained itself. As you can see, the market like swung up, and I was in a bit of profit, came back down, took me out below this low, and then I got in another entry again in London. So this was a 1 to 5, so I simply entered at the low because I saw where price was heading to, and then I was able to sort of like get out of the high, so I was able to take profit and cover the loss from my initial trade. Nice. But now I'm actually in another position because so I got out of this trade right at the high, but then of course I was waiting for PPI because PPI obviously just took place. I was like, I want to see what happens. Either PPI drives price to the upside and I see market taking out all-time high, or PPI is just gonna like leave price in this range because right now price was ranging. So this is the consolidation range. But my area of interest, so if we go on to the 1 hour, because again, bullish is still the direction of bias. There was this imbalance on the 1 hour time frame, and I took an entry. So the moment price traded right into that imbalance, I took an entry, but it was within context of trend cycles because in terms of trend cycle, so this is still within a predominantly bullish cycle at the moment. So it's currently in that second phase of the cycle. So all of this for me is just like choppy price action within that second consolidatory phase on the 15 minutes. And then on the 30 minutes, exactly the same thing. So the market came down into this imbalance and it gave a new break of market structure, right? And then market tracked above that high. So railway tracked back into the range. So for me, like the bullishness is very clear. I'm very, very confident that the market will deliver a higher high relative to these highs that were created during London Open. It was just a matter of getting a good entry in. So market traded right into that 1 hour imbalance, took out the low of the range, sort of accumulation range. Because again, when the market is accumulating, it's optimal to buy at the lows, sell at the highs. That's pretty standard. But in gold, it worked really, really well within the right context, of course, like context of you're trading in the right direction of the trend. So yeah, so there was a lot of confluence around the buy, which is why I got in there. Now I'm just simply holding this. So it's a very simple trade idea, really and truly. So long from the imbalance, my stop loss went below the close of the imbalance. And then my profit target is the short-term high so the short-term high is a bit more visible on the 30 minutes time frame right there. Right, so there is a possibility the market could shoot above this high and take out the prior high on gold. But I don't, again, like with experience, one thing I realize is just because price is close to a prior major high doesn't necessarily mean it's going to take it out straight away. Sometimes there needs to be a catalyst, like a red news event in line with that. Sometimes it just happens when you least expect it. So for example, the market could go very close to the high and it give a very sharp reversal to the downside before when you least expect it going up to take out that high. So just based off that, I just don't like, I will not just assume that just because the market is close to the highest point for gold this year, it will take it out. Hence why I'm just going to take my profit at an intermediate high. Worst case scenario, if price were to tap this high and give a sharp reversal, I've taken profit. So 1 to 4, I've got no complaints with that. Right now, my goal is to end my week in the green. And then next week, at least I can get it started on a good note. So that's it for me. So currently gold bias is bullish, currently long, and I'm anticipating price to trade to at least $2,952.
Nice. Yeah, I mean that looks really that looks really good. The way you explained that. Arcus FX, I think that's James. That is James. Hello, fellow traders. Hello, James. How are you doing?
Hey, James.
Got other coaches jumping into the chat. That's pretty awesome.
That is cool.
Really cool. Really cool. Yo.
But yeah, now that's it for me. So shall I hand it over to you, Sam?
Yeah, awesome. He goes, let me in. Oh, okay.
Let me in.
Let me in. I don't is James meant to be joining us? I don't actually know.
Yeah,
we just barred James accidentally.
Let me, because I'll send the schedule. Oh, it's just me and you. James is joining late.
Okay.
Yeah, so James is on tomorrow morning or tomorrow first thing.
Okay, not today. Okay. James, take a day off, relax. I mean, you're free to join, but you know. All right. Let's load up the charts. I have yet to actually look at my charts. They're still messy from yesterday, so I have to do a little bit of clearing up, but that's fine. I can do that as I share the screen.
Yeah, you can clear it up live.
Add to stage. All right, you should be able to see it. So yeah, let me just clear this up a bit because this is very messy. A lot of this stuff that is not relevant anymore. So let me just do a bit of the old cleanup, and then I'll get down to business. I would remove everything, but then there is some stuff that's actually quite important. So I don't want to have to redraw it all. So I'm going to do it the old-fashioned way of literally going bit by bit, cleaning up the charts, getting rid of all these little lines and whatnot. That's still relevant.
By the way, Sam, have you used Atos before for volume profile?
I've never used it. Have heard of them. Apparently, I believe they got a really good depth of market tool. Apparently, but I've never actually used them.
Yeah, because I studied this a few years back, and I used to use Atos actually to so for depth of market, for like volume as well, and the candles. Basically, like what you do. I didn't even realize that you could do all of this on TradingView. So when I saw you doing it, I was just like, "Oh wait, what?" I used to like pay for the Atos license just to have access to that kind of data.
Oh yeah, I mean, I used to use a platform called Sierra Charts. It's a really capable platform. Don't get me wrong, but my God, is it complicated? Like it really is a headache to use. So when TradingView came up with, their version, I just switched to TradingView. It's so much more intuitive. There are still elements I don't like. The TradingView depth of market, I have to say, is terrible. Like this is just not good enough. So I never use it. I use a different one from my futures broker TradeStation, but it's a separate. Don't know if I could show it actually.
Oh, you use TradeStation.
Yeah, maybe I can show how it's, because I kind of piece windows together, right? So I don't think I can. Oh no, these are all just web. Oh, these are websites, right? Okay, I can do a window, I think. No, can't do that. Maybe I could just do the entire screen. If I share the entire screen, you're going to see a bit of a weird version of me. But and then basically I have, hopefully you can see that, I have TradeStation next to it with the depth of market. So that's how I'm usually actually analyzing it. But yeah, I can't really show it unless doing the whole screen share thing, and that really messes everything up. But to be fair, like it's not really. I mean, the depth of market is good, but you only use it like I only kind of glance at it every so often, like when I'm kind of trying to figure out where there could be some like resistance or support or something of that nature.
Right.
I'm not really looking at it too much in terms of like making my overall trade decisions. So I kind of just glance on it a bit in there. So it's not a tool that like I completely rely on. I can kind of trade without it, but it just gives me that little bit of extra bit of confidence when entering and exiting, especially with the exits. You know, like if I'm in a good trade and it's pushing and I start seeing loads of pending orders close by, I already start to know, okay, this is going to be an interesting area. I might have to lift off my position around there. And judging from how easy,
we're going to see like some sort of a strong reaction.
Yeah, if there's a strong reaction, then I know, okay, get out. So I use it more for like in the moment. It's not something, because it's live, right? Like you can't scroll back on the depth of markets. It's not something you can use to like analyze, so to speak. Like making decisions beforehand, you can't really use the depth of market because it just, if you see contracts just appearing, it's live right this second. You can't kind of historically go back and see, I wonder how many pending orders there were here, for example. You can't do that. So in that respect, you only use it really when you're in a trade or about to enter one. But anyway, where was I? So, right, let's do a bit of analysis of what my bias. I mean, we're in a ranging market, so naturally, you know, you're going to expect if it gets to the highs, you're expecting bearish pressure. If it gets to the lows, you're expecting bullish pressure. That's pretty much, I don't see anything. I would love for it to come back to this box area here, but that's again the high of the range, so that would kind of make sense. Or ideally, I've got an alert set to this area here, this gray area. That would be lovely if it can reach there. I know we've got a nice push down coming, but yeah, right this second, I don't see any gaps in the volume. We've got this really kind of, where is my tool? You know, I never use like the pen tools and stuff, but I know it's here somewhere. Brush, here we go. Way. We've got this really like clean shape on the volume profile, right? I hate it when it looks like this because there's not much you can really analyze from here. Because normally I'm looking for like clear drops off in volume or something like that, right? So like if I, where do I get my normal crosshairs? Here we go. So if I go back to like, so like this, the reason I drew this out is because you got lower volume trapped between heavier volume, right? And those areas usually react really well with price. So, but we're not seeing anything like that today or even yesterday, really, in the volume profile. So it's really just a proper ranging market right now. Got a slight one there, but nothing I'd be too interested in. Let me just double check I'm not missing anything. Another way is, whoops, I don't want to do that. Control V. I don't want to be moving stuff about. Get the volume profile tool. I'm going to stretch it from the start to the bottom. Again, yeah, we just got a real big build up in this range here. So I'm going to treat it as a ranging market, which it is, and basically wait for it to get to the lows and all the highs. And from there, hopefully we'll be able to trap some of these breakout traders. Hopefully it'll be a false breakout of some kind. Get them trapped and jump in for a nice little quick reversal. That's kind of the game plan I have today. There really is not much. It's just sideways. It's just ranging. All the volume's built up right in the middle of the range, which is you know what you'd expect. And I would never trade.
This has been very typical. Yeah, this has been very typical in quite a few markets this week.
Yeah,
a lot of just range bound markets like this. It's crazy.
Yeah, and I would never trade in the middle of a range. You know, it's risky. So yeah, I've got my alert set. There's not much I can do. I mean, market has opened 5 minutes ago. I'd love to see what kind of volume's looking at. Wait, this is 5 minute chart. Yeah, so here we go. Yeah, the volume is relatively low for open, to be fair. I think other people are seeing the exact same thing. We're in the middle of a range. No one's really putting any real orders into the market right now. So action's not going to happen until we get to the extremes. That's pretty much it. One of them, one of them, it's going to hit one of them eventually. Until it does, then I'll have something. But at this moment in time, nothing.
Just wait and see.
Yeah. And the depth of market is looking pretty dead as well. Yeah, it's pretty dead right this second. But I'm confident it will go to one of these areas today. I'll be very surprised if it just literally doesn't go up or down. Something will happen. It's just I have no bias on which one it could be. It could be either one for me. But then it would just be a small scalp, basically. I'm not going to be holding anything too long. Yesterday I did take a trade. I took it here, a short position. I took two actually. One, it worked out, but it didn't work out just as well. I took it around here somewhere, and I basically got out like close to break even. I made a small profit, and then it came back, took out the last little high, and you had all these breakout traders come in and get trapped. And I had a beautiful trade. About 15 minutes, it was like zero drawdown. I actually recorded it, so I could show it. I recorded it in order to make a YouTube video out of it, and that was like pretty much the trade. I didn't get out right at the bottom. I got out when I saw it started pushing up again, something like that. But I could show yesterday's trade. That's something. If it's a really boring session, I could do that, like a little video and explain that. But as of now, there's nothing I can really show on the live market. So yeah,
amazing. Now it's just a waiting game for you, by the looks of it. Waiting for price to sort of like break out of that range and do something.
Pretty much. It's just part of trading, isn't it? It's like every time someone goes, Sage FX goes, James being desperate. I don't get that, to be honest. Oh, James, right? Yeah, James being desperate. Right, I'm with you now. Because he wanted to come in. I was wondering, I was like, James.
Where was that coming from? Oh, James. Oh, Sage FX saying James being desperate.
Yeah.
That's funny.
James is going to take a day off. The only person who wants to work on a day off. Well, no. I mean, some people do. But hopefully this wouldn't be a boring session. I mean, I really hope within the next 20 minutes or so we actually get to one of these areas, because otherwise I want some action in a live session. I think I've only ever entered Sarah goes, where is Robert? I came here especially for him. And he's, oh, Robert, of course, Robert. So I don't know if you know, Walter, but Robert is one of our, oh, there he is, Robert. Yeah, he is here. Amazing. Robert is like our #1 fan. He comes on every session, always leaving great comments, words of encouragement.
Amazing.
He's awesome. Robert's the best. He's right now Ola Prime's live streams #1 fan. He's got that title.
Nice.
But yeah. All right, maybe I can show the video of yesterday. Let's have a look. Where is it? I can actually find it now.
Yeah, so things are moving on gold actually. So now it's actually about to hit targets. Very, very fast. I'm now having a nice turnaround for the week and a period of time actually.
Do you wanna share your screen?
Yeah, of course I can. 2 seconds.
Awesome.
I could also take a look as well because I'm looking at Bitcoin. So I could talk about sort of what I'm looking at on Bitcoin to the dollar. Let's take a look. There we go. Just sharing my screen now.
Awesome. You're up.
Yeah. So so as I said like a few minutes ago, so at the time price was down here, I was long. So my entry was at the H1 imbalance and aiming to take profit at the next buy side target, which is this intermediate high. Well, there's this high, and which is more visible on the 30-minute time frame. So if I go down to the 30, you can see the high I'm referring to. So these are actually relative equal highs right there, right? So relatively equal highs at 2952. And then if price were to break above this high, it will likely take out this high. If price were to break above this high, it will probably head towards the all-time high on gold, which currently is sitting at $2,956.18. So pretty quick trade, 1 to 4 on that one. And after that, we'll see if there's any going to be. So after price takes out this high, it's going to be a lot easier for me to evaluate and see if this potentially going to be another setup for New York, but this is the main one for now. And then I'll just take a quick browse at Bitcoin because, again, I've been waiting for something to set up on this, and it looks like it could potentially set up in New York session. Not a big fan of trading Bitcoin in New York because it tends to, for whatever reason, move in the middle of the 9th or Asia session. But, well, not for whatever reason. There's actually a lot more trading activity in Asia for Bitcoin. However, so Bitcoin currently has been bearish for the past few weeks, right? And it's been very interesting because I remember the last session I had a session on, I think on Thursday. At the time I mentioned I was short Bitcoin, and I was anticipating Bitcoin to take out this low. So if we zoom out, this is the low that was created on the 28th of February at 78.141K. So price did eventually take out that low, and after taking out the low, it rebounded back into the range. Okay, so I guess now the question some people are asking is this it? And this sort of thing, like so many people are so like bullish on Bitcoin that they just get confirmation bias. They're just looking for every sign that Bitcoin could be bullish, and then they miss out on taking short-term shorts. Currently, I don't think the bullishness back to the new all-time high is started yet. For two reasons. The primary reason is because the 4-hour hasn't given any defined breakout structure to the upside. So the 4-hour is still very firmly within a bearish market, right? All the market has done, if you take a look on the daily time frame, it's a lot more obvious. All the market has done, it's traded back into this daily imbalance. So it's gone from sell side liquidity below this low to buy side liquidity pool within this imbalance. So logically, because the market can be logical at times, where do you think the market is going to head to next? I think it's going to head back down and it's going to seek some sort of sell side liquidity. I'm not saying it's going to seek sell side liquidity below the low that was created on the 11th of March, because there are some other intermediate lows on the 4-hour and the 1-hour that I'm targeting. So on the 1-hour, the next low that I'm definitely targeting for price to trade towards is 80K. So I just see the market trading back down to 80,000 to 80.5K on Bitcoin. So the setup that I'm waiting for on this is pretty straightforward. During PPI, we saw the market traded right into this imbalance. So I marked out this imbalance in London because I was waiting patiently for price to trade into this imbalance for me to take the shorts. But I was having dinner, PPI took place, and the market pinged that imbalance. So I kind of missed this entry. But the second entry opportunity I'm now waiting for is I'm waiting out for the market to break below this low. So you see this low that was created at 82.2K. The market will eventually break that low. The moment it does, and the moment I see a new low below this low, this region becomes my new area of interest, right? So it's very simple. Market breaks this low, not just in a single candle. I want to see a swing low form. And on the 15 minutes time frame, that's going to be at least 3 candles. So it's going to take at least 45 minutes for some sort of setup to form. Could be an hour, but I'm waiting for a swing low to be defined below this candle. After that, AOI is going to be this order block. Then my entry opportunity is going to be at that order block. Stop loss goes above the high, and I will essentially be looking to. So this is going to be the trade. So entry there. If there's an imbalance, I will just take an entry at that imbalance. Stop loss above the high, and then take profit at the low of 80.5. Right. So that'll be a nice 1 to 2 risk to reward. So so that's what I'll be looking for if potentially that sets up within the next hour and a half. If it doesn't, then I'm just going to probably be in bed at that point. So I'll see what happens. Oh, look at that. Gold has given that nice shoot into my profit target. Very nice, very quick. That's why I love it. That's why I trade it. Doesn't waste any time. Well, sometimes it does. Sometimes it takes the absolute piss, like it's been doing for this week. Especially within this range. The gold does this weird thing every now and then where it just gets stuck in a range like this, and then you're just holding your position, and then you're just like, I know this is going to stop me out, but there's nothing I can do about it. So I'm just going to wait for the next good trade to show up. So so that's it for me anyways. Right now it's just a waiting game, I guess.
Nice. Yeah, gold always scared me. I don't know. Every time, like in the past, I've ever traded gold, I was fearful of it. I don't know why. It's one of those instruments. I hated gold. Like
people fear what they don't understand. The moment you understand it, the fear eases. But gold is like a wide bull. You know, you learn to ride a bull, like those Spanish people that they play with their lives, you know, on the bull runs. But once you know what you're doing, once you know the size to look out for, you know when to get out of the way. Like with gold, the best time to get out of the way is before red news. So like if I'm in a trade before a red news event, doesn't matter how much profit that trade is in or how much loss that trade is in, I'm out. I'm not going to wait for the I'm not going to wait for the market to like wick me out for no reason. So with gold, like definitely like it requires so much more discipline than like euro dollar, pound dollar, so much more discipline, so much more patience. But it moves very, very gracefully. Like when it moves, you know, but when it doesn't want to move, it makes that very clear to you that it's not going to move. And then you just like sit on your hands.
Yeah, no, absolutely. I think for me, it was like the volume on gold. When you look at the volume and like in the footprint and stuff, it just never made any sense to me. Gold, like the numbers just didn't represent what I was seeing a lot of time. Maybe that was, I don't know. Maybe I got the data wrong. I don't know. But
no, because it's very it's decentralized. I mean, you're not gonna get the same. You're not gonna get the same data in a market like gold or even FX as you would with the market you trade, because the market you trade goes through an exchange. All orders flows through the exchange. So through that, it's a lot easier to get more accurate data. Whereas gold is decentralized. There's data coming in from different brokers, different banks, different exchanges all around the world. You know, and they have to like aggregate that information. And there's going to be a lot of order flow that goes through black boxes. So these are orders that just are not going to be publicly available or accessible until after the market closes. So yeah, gold will be like super hard to trade just using order flow or just using volume print alone. You're not going to get accurate information.
That's exactly it. I mean, like, even though obviously I was using the volume based on the CME, so it was actually a centralized exchange, it's not taking into account all, like you said, all the other decentralized areas, right?
Yeah.
FX, etc. And although they're technically two different charts, they mimic themselves pretty accurately. But like you said, in terms of order flow, I mean, look, it wasn't completely off, but you're right. There was like a maybe 20% inaccuracy in it almost. And that in itself made me feel less confident. Whereas the indices, like the S&P 500 or something, pretty much only kind of, one exchange. You can do like CFDs, but then again,
exactly.
It's minor.
That's
right?
A derivative. So,
yeah. So it's just like you can almost count up the orders and it balances, right? Like you can almost that's how good the data is. You can almost count up every buy and sell and all the delta, and it actually like balances out, right? Like mathematically it will balance out. And that's what I love about it, because it's just so spot on, the data. And it's the only one that I feel truly confident trading. So
no, absolutely. Like for your definitely for your style of trading, like trading exchange traded products is, yeah, like that's the way, because yeah, that's how you're gonna get your accurate data. Because you're very data driven in your style of
oh
trading.
yeah.
So it's like your accuracy is like of utmost importance.
Yeah, no,
Whereas
100%.
with this one, it's more like order flow and price action. And the thing is, like with gold, because I've been looking at it for so much, is like I can just go on an empty piece of chart. Like a lot of the time, I like to trade with two charts, like one with all my analysis, another one with nothing on it, because sometimes it's easier to see what, like if I have a lot of stuff on my charts, it's easy to get confirmation bias when you miss one crucial piece of information. But then when I have like a blank piece of chart like this, it's easy for me to see the bigger picture, because then it's like when the market is consolidating like this, I notice straight away. Because with something like this, all I have to do is wait for the market to take out key highs and key lows. But if my bias is bullish, I'm just waiting for the sell side to be tapped. If it's bearish, I'm just waiting for the buy side to be tapped. That's how easy it is. Like something like this again, it's like you have this range, and then the market comes down, taps the low, and then after tapping the low, it runs. Right? Stuff like this is so easy to it's so easy to miss when you have too much stuff on the charts. But then when you're just like looking at the pure price action, it's very easy to see this. Again, it's like another consolidation, and then the market taps the low,
Sure.
and then runs in line with the bullish bias. And this is literally, it's almost like what is the secret to trading gold? I was like, this is it. Just wait for the consolidations, identify the trend direction, wait for it to tap the high or the low in line with the trend direction, and then that's when you're looking to trade it. Because it tends to like consolidate quite a lot. It's like once you get into the flow of it, like you're gonna get situations like this. Like this, for example, screwed me over. It doesn't matter whether you're in the right direction. It doesn't matter. You still get tapped out because the market is just like wicked. This was on Friday, NFP, by the way. NFP was brutal on Friday. It was just untradeable, absolutely untradeable for me this Friday. So yeah, so I got out before NFP, and I was like, I'm gonna wait until after NFP because there's gonna be an opportunity. And then I was like, all right, because I was actually bearish on gold. So I got out of NFP, and then the market basically came up, like it came down, and then it came up and it took out the high right there. And then I was like, cool. And then so actually no, my initial entry was after the market took out this high, right? So my initial entry was actually right here. And then it ran down, and I was like, cool, I'm in profit. And immediately, I just blink, I go away to get some food. And then I come back and I see that I've been stopped out. And I'm just like, what the hell's going on here? The market gave a higher high. And then I'm like, am I in the wrong direction? And for the first time in a while, I was actually doubting my directional bias. I'm just like, this is definitely short. How is this given like such a crazy new high? And then it came back down into the range. And then I'm just like hesitating, like, should I buy? Should I sell? Should I sit out? And I just ended up sitting out of this because I'm just like this completely caught me off guard. Like this stuff caught me off guard like crazy. But then it came down, created an imbalance, tapped that imbalance, and it ran down and took out the low. Then the next day it gave that continuation to the downside. But stuff like this, it screws me up from time to time.
Look, I mean that would screw anyone up, right? Because if you were you were short in there, but even if you went long, the same thing would have happened. You know what I mean? Like
the same situation.
Like, everyone got stopped out on that little area. That was just it's just
this was brutal. So this is known as a board clearing move, right? So it's just like a form of manipulation to take up buyers and sellers from the market, clear the board, and so fresh orders can pour into the market. But yeah, like every now and then, like everyone's going to be a victim to some sort of board clearing move in the markets, which is unfortunate.
Yeah, it happens. But that's just part of trading, and you try and have a good risk management. Sorry, Matrix says that's a comment. Is Igor coming today? I believe Igor is scheduled later. Let me just double check for him. Yes, he is on the last session, Matrix. So the third session, last call. So in about, what time does that start? Can't do the math in my head now. In a few hours, say about 3 hours or so, Igor will be live. So yeah, tune in for him. Let's have a look at the chart. I heard my alert go off. So
you can share. Let's see what's happening.
These headphones that I got, they're just some cheap ones I bought just for these live sessions. And they're generally quiet, but every time there's a trading view alert, it deafens me. And I don't understand. It makes no sense. The loudest thing on the planet, it like hurts my brain every time the trading view alert comes on. But otherwise, it's quiet. So I don't know.
Turn on the volume for trading view.
Sorry?
Turn down the volume for trading view. So you can specifically turn down the volume for the apps.
Can you?
Do you use trading view on the website, or do you use trading view as the actual application?
This is the website. Yeah, this is the actual.
Oh, you use it from the website. Oh, I see.
I didn't realize there was an application. I'm gonna be honest. I had no idea.
There's a desktop app. You can download it on your desktop, and you can just and you can just. That's what I do. That's what I've been sharing on my screen. You don't need to go on the website. That's like the best way to access TradingView now. Rather than having to go on the website and sign in, you can just open the app and you're already logged in, your chart's already saved, and it's just like any other app on Windows. Yeah, pretty cool.
Genuinely had no idea. I got the mobile app, but I didn't realize there was a desktop one as well. That's amazing. I'm going to download that after this session.
Yeah, check it out afterwards.
I never know about that. Oh dear.
That's funny.
Well, yeah, I'm definitely giving that a go. So I don't know, that's not the low of the day. Let me use the candlestick chart. I can see it better then. Oh, that is the low of the day. That was yesterday's low. But I'll still mark out yesterday's low as well. It's good to have. All right. So hopefully we got this, actually quite a big push down right now. A lot of volume coming in, I think I saw. Let me just double check. Hopefully. This is just hopefully. More of these sellers push it down and get very confident, try trade the breakout, and it will turn out to be a false breakout. And then we can get in for a buy. So what I'm doing now is basically counting up roughly the kind of volume the sellers pumped into the market. Because we pushed down. So the open was, where did we open? Around here. Yeah, here, 1:30 UK time. So we had, 1,000 here. Well, basically 2,000, 800, say another 3, 4,000, 5, 6, 7, 8, 9. I'll say about 10,000 contracts, right, on the sell side. Obviously, it will be a bit more, but I'm just ignoring the smaller numbers, just trying to give the bigger chunks, right? So I got a rough count in my head. We've got about 10,000 sell contracts. So I want to expect to see at least, so something's happening now. These could be these sellers getting out, taking a bit of profit at these lows. That's probably what we're seeing, right? Now that we're seeing these bigger buy numbers coming in exactly at the low. I can check the depth of market as well if there's nothing crazy. Yeah, the depth of market seems pretty standard. So these are people taking profits. We got these sellers exiting, but there's still a lot of sell pressure in the market right this second. I had 10,000 counted. I'll say about 8,000 now. We've got another one going out there. If we get to about 5,000 count, then I will potentially see an opportunity for a trade, because I really need these sellers to get out the market before thinking about entering. Just switching it to the 5 minutes. Sometimes it's easier to see on the 5. Other times it's easier to see on the 15-minute. I quite like the 15-minute. And I'm just keeping my eye on the actual contract, seeing, are more sellers trying to sell, which they are. There's a lot of activity going on. There's actually new sellers getting in and existing sellers getting out and taking profits. So that's quite interesting. So I'm going to give it a bit more. I don't think it's going to happen right now. I have a feeling it's going to push down a little bit more. And there will be a trap appearing very soon. So that should be quite interesting. So my guess is we're going to do this. We're going to push down a little bit more. Then you'll see even more heavy volume come in, and it will start going against them, and we'll have a trap set up. That's my gut feeling here. But obviously anything can happen. But I'm still seeing sellers piling on the orders. There are a lot of them getting out as well, taking profit, but not too many got out. We still got plenty of sellers. I want to see those people trading a breakout, right? So we've just literally broke out ever so slightly to the to today's low. But yesterday's low would be really nice if we got down to there and just had a huge amount of people believing it's just going to flood down and get trapped. That would be lovely, because then it would really ping up with some speed, you know, and some momentum. We can get a really good trade going in. So I'm going to keep my eye on that. Let's look at the comments while that happens. Robert says, what does Sam trade other than S&P 500? Nothing, Robert. Literally just the S&P 500. Gives me everything I need. You know, one or two trades a day maximum. And when I say two, I mean because sometimes you get in, realize you didn't have the best entry, you get out, and then you get in at a bit better price, but it's still part of like the same trade, if that makes sense, right? Sam, if you're using Windows, you can right-click the vol icon on the bottom right of your screen and select Open Volume Mixer, and you can turn down the website volume. Okay. Let's have a look. Oh, yeah. See? Tech support. This is beautiful. There we go. All right. I shouldn't be deafened anymore. Thank you for that, Robert.
Yeah.
Thank you for that. Much appreciated. I'm not going to be deaf anymore. But yeah,
that's what I wanted to show you earlier, but I was like, it's okay.
It's all good. It's just these cheap headphones, man. You know, they have no balance in them, but they're good enough to do these live streams, and that's all that matters. So yeah, so to the viewers who are watching, I'll just give you a little update. Still the same situation. I'm not seeing anything worth jumping in. What I am seeing is sellers are jumping out the market, taking profit, but the majority are still very, very much in the market. You can see these numbers getting bigger, the buy side numbers, right? Another 1,000, another 1,600, etc. That's these sellers on this push down taking profit, right? So normally you could jump in for a small trade. Once you start seeing a lot of sell pressure get out, you could probably like jump in. It's not my favorite. So imagine you jump in here. You could do a very small scalping trade, right? It's not my favorite setup because no one is trapped, right? And the reason I like people getting trapped is because it forces a move in the market, right? If someone is, you know, if someone is trapped right now in the market and it's going against them, they're forced to exit, essentially, right? Because it will get the most immediate response out of people. If it's more like, you know, it's coming up and you're waiting for sellers to defend their position. So, for example, there's two setups, right? When you're reading the volume. Let me get the path tool, right? So you got the setup where, like, you see there's like heavy volume came into here, right? This area here. 2,000 contracts, basically, another 800. Nice big chunk of heavy volume, which was very successful for these sellers, right? Push the market down, right? Now, imagine the market pushes up and gets to that area. Naturally, these sellers are going to, or other sellers are going to see, hey, look, it worked out for these guys before, might be a good area to short the market. So you're going to have sell pressure come in again, right? And they're like defending that area, defending that position, and hopefully it pushes it down again, right? So that's like basically like a retracement, and you jump in. It's kind of like almost like Fibonacci, right? Fibonacci retracement, but you're just looking at it from the terms of volume. Now, that's one setup, but I don't really ever trade that style. And the reason being is because you're relying on other sellers these people or new sellers to make a decision to jump into the market, right? To actually put money on the line for that to happen, right? And okay, look, there's a good chance that might happen, but it's not, no one's being forced to jump into the market. Does that make sense? Whereas when people are trapped, right? Now imagine, let me paint the other scenario. Imagine now you have loads of sellers coming in and they push the market down, and then you have a huge amount of sellers, right? Like all here, like right at the tip of it. Actually, let me draw that better. Let me make that more clear. Imagine the market pushed down, right? It did push down. Instead of all these buy contracts, we just had a huge amount of sell contracts in this region. And the market's now pushing out against them. What if you were stuck in that position? If you were one of these sellers, right? You're going to be forced to exit the market. I don't know what the hell's happening here. Okay, I tried to make a little circle thing, but it didn't work. But in this area here, you'll be forced to exit the market, right? And that's going to give it a much more of an immediate reaction. So that's why the trap setup is really the only one I really like to use. Just because it forces more of an immediate response. And what we're seeing here is essentially just sellers exiting the market, right? We had a little push down, nothing too major, and these sellers are just getting out of the market. But it's not like a forceful getting out, like they're being trapped. They're literally just taking profit. A few people are getting out at break even pretty much. You can see where the numbers spike up, align perfectly with like these people here, right? Where these bigger numbers are. These are just people getting out, probably at break even, getting stopped out, stuff like that. Nothing too major, right? And the volume wasn't big enough at the bottom. Okay, I want people who are trapped, the volume's got to be at the tip. Okay, like at the tip of the move. So like here, if there was a really heavy volume here, that would be the perfect trap setup. These are just people who made a bit of profit getting out. It's not going to cause a major reaction in the market, so to speak. So I still think we'll probably push down a bit more and break that low from yesterday, and then we should see a nice trap setup occur, especially in the ranging market. It's always going to be the lows. Whenever you get these breakout traders, right? Whenever the breakout occurs, you're going to see lots of volume come in the market. People thinking, oh, look, it's going to make new lows. And a lot of the time they're vulnerable and they're going to get taken advantage of. So that's kind of what I am waiting for to happen. I'm waiting for these lows to be truly taken out. And then I will see, hopefully, something good. Right, let's see, comments-wise. Or you can definitely trade those headphones. Go for Bose. Yeah, Bose are good headphones. I used to have a pair, but I don't know what happened. I think I left them on the plane. But never mind. Yeah, I left them on the plane. And I never... Yeah, what are you going to do?
You can just wave it goodbye. Watch your plane flying up and be like, bye-bye.
Do you know what it was? I noticed I got off the plane already, like, I can't remember where I was. I think I was past the passport security and all that. And then I realized, oh, my headphones aren't there. So I asked someone, like someone who worked for the airline, whatever, or like someone who worked at the airport about, like, my headphones are literally on the plane. Can I go grab them, or can someone grab them? They're like, no, we can't do. You have to fill out this form, go online.
Oh my god!
All this stuff, yeah. And I'm like, it's literally. I can see the plane. Heathrow.
Oh god, yeah. I can imagine that. I had a similar situation happen to me recently, but this was when I was coming back from Thailand, and then I thought, so I had my AirPods on me, and I had my earphones on, but then when I got to, like, I was walking, so you get out of the plane, you go down the steps. So I got to put my earphones in my airport, and I was like, I can't find my airport case. So I tapped all around, I couldn't find it. I'm like, damn, I think I left it on the plane. And then I went running back up the steps, running down the walkway, running back to the plane, and I'm like, they wouldn't let me back on the plane, but I'm like, look, can you just go check my seat, please? Because I was sitting near the front. I left my, I think I left my case in there. So the guy goes in and takes a look. It's not there. I'm like, please, can you double check? Can I come in and take a look? It's like, no. It's like, there's nothing there. We just like, there's nothing there. And I'm like, damn. And then I go to check my front pocket on the jacket I was wearing, and it was right there. It was like in my jacket pocket.
Very lucky. Very lucky.
So I was just being an idiot. I was just like, yeah, can you imagine? I was like the first to get off this plane. I could have been the first to get out of this like damn immigration, but I had to run all the way back. And now I'm the last and I have to get into this long queue because of this, of like being forgetful. Goodness. Yeah. But leaving stuff on the plane, or the fear of leaving things on the plane is the worst.
It's the worst. Yeah, because you're right. They won't let you back on. They won't. You have to go through such a long process. I just gave up with that fast. Like, it's not worth it almost, you know, because then I'd have to go all the way back to Heathrow, collect it on some other time, and there's a fee you have to pay as well. I'm like, it's right there. Just go to the plane and grab my headphones, man. Like, they haven't left. There's people cleaning the plane. Surely someone will pick it up and just, you know. But no.
Imagine having to pay a fee for your own personal property. The audacity of this.
Yeah, they make money on everything. What can you do?
Crazy.
What can you do?
Gold is, I mean, Bitcoin is setting up nicely.
Do you want to switch to yours?
Yeah, I mean, there's not much for me to say on this, but it's getting there. That's all I can say. I can share my screen and show you what I mean by that.
Cool.
Yeah, it's getting there. You know, it's so as exactly as I said in terms of the break below this low. Now I'm just waiting for that third. So I'm waiting for a swing low to form, but it cannot trap back above this high, meaning it cannot be like a morning star formation. It cannot be a railway track. It cannot be a trap pattern. It has to be a firm and solid close away from this low. So yes, I'm waiting for now that. So the close of this candle, and then the third candle has to form a swing low, meaning the low of the third candle shouldn't go below this low, and it should close below this low as well. So if the third candle either trades below this low or closes back into this range, then it invalidates my setup. But if that third candle closes below this low and doesn't trade below this low, forming a swing point, then like that for me is like it validates the setup. So next step for me is to place a pending order. Now with this case, like a lot of the time, the safe thing to do is just to place the pending order at the edge of the range. So this is the low of the previous range. So it's usually safer to do that because with gold, like with Bitcoin, it wouldn't always mitigate against imbalances or prior highs and prior lows. It wouldn't always do that. Sometimes it does, sometimes it doesn't. But like in this case, like it did, but it did like after the move and then just waiting for a while during the ranges, it came up mitigated against that imbalance. So sometimes you can get more refined entries at imbalances, right? So as you can see, the market has created an imbalance right here. So I look for confluence, an imbalance within an order block range. It's confluence. So if you get a more refined entry there, stop loss goes above the high, take profit below the low. Or you could just place a pending order there, stop loss above the high, right? For me personally, I like to go for 1 to 2. So in this case, like minimum 1 to 2 RR. If price gets to this low, it's probably going to take out this low anyway. So I could still get a 1 to 2 just below this low, which would be nice. But yeah, because I've already gotten a nice trade from gold. I'm just going to aim for a more refined entry. And if price doesn't fill me in, then it doesn't fill me in. I wait for tomorrow. There's going to be many more opportunities and many more trades over the coming days ahead. But if price does fill me in at a nice entry and I can get a 1 to 2 to this low without needing to aim for an overshoot, for me, that's like a very safe and reasonable trade to go for. So yeah, so now it's just a waiting game. It's waiting for this candle to close in something like less than 20 seconds, and then waiting for another 15 minutes. So like in a real time scenario like this, because I trade based off candles and I know how long to wait, I'll sometimes be like, cool, and just like set a 15 minutes timer. I go to the living room, maybe watch an episode of an anime that I've been wanting to watch, or make a cup of coffee or something, or just like get away from the screen, because like 15 minutes is gonna go, right? You don't want to sit there spending 15 minutes watching a candlestick. That's just pointless. You know, you can achieve a lot in 15 minutes. So so I'm always like, what can I achieve in this 15 minutes of me waiting? So yeah, so that's that. And there is actually going to be a setup forming on gold as well in New York session. So I'll take a look at that as well real quick. If this forms before I go to bed, that would be absolutely amazing, because I really love trading. I love placing a trade and waking up the next day to a TP hit.
How do you do that?
That just makes my morning even more magical. You know, you wake like if I wake up and I check my phone and it's like TP hit and it's 5 a.m. That's my natural alarm. I don't need to do anything else. I'm awake. I'm fully awake. I don't even need coffee that morning anymore. I'm like wide awake. I can just crack on with the day as normal.
Bro,
so,
I can't sleep if I'm in a trade. Like when I used to do try swing trading back in the days, if I was in a trade overnight, my dreams would be dominated of me in that trade, stop loss being hit, account blown. I couldn't sleep. I don't know how you just drift off knowing you got I can't do it, man. I can't do it.
Because I mean, it's okay. So here's the thing: like, if there's no red news scheduled for New York, like that time is usually a very, very low volatile period. Not low volatile, it means that there's no red news. So, and it's always a managed risk. Like I would never enter a trade and risk like 90% of my account. So it's always going to be 0.5%, 1%. And in this case, because I'm already profitable for the day, I'm only going to be risking a small percentage of that. So I know that if I wake up tomorrow morning, there's one or two scenarios. A, I hit TP and I'm waking up to a nice profit. Or B, I hit a stop loss and I take a small loss, but I'm still profitable for the day. So for me, either scenario is not bad. So I can still sleep peacefully, like unless some dodgy shit happens and a broker decides to, I don't know, manipulate my orders or whatever. But that's like very, very unlikely in this day and age.
I could never do it, man.
But I feel you. Like there were times where like I hated, like I don't like to always leave positions open overnight. But nowadays, like if I do see something setting up towards the end of New York session, like I really don't mind just letting the trade run as long as like the risk is good and the opportunity looks good. Then it's not a big deal on that.
Yeah. Fair play. I mean, you got more control of your emotions than I do. That's for sure. I'll just go over a few comments of what people said real quick. Robert was saying,
so just like type in a reply.
Yeah.
What was saying?
I'm just going over a few comments real quick. Robert says, "Dang, I need to switch back to the S&P 500. I'm hooked on the NASDAQ."
NASDAQ. Absolutely love that.
Yeah, I mean, look, the NASDAQ, S&P 500, they're very similar. I just find the S&P 500 volume-wise has a bit more volume, and it's sometimes a bit easy. Like the range from small to high volume is a bit bigger, so you can just easily see a bit more like where the heavy volume is. But to be honest, basically the same thing, right? In the way it moves. Question for you, Walter. Robert goes, Walter, what anime are you currently watching?
Oh, I'm watching Solo Leveling. That anime is absolutely, so Netflix, absolutely dope. And Sakamoto, I recently started watching that as well. Super dope anime as well. That's also on Netflix. Yeah, a lot of like the OG stuff I used to like. They're not really showing anymore. So nowadays I just find something that's actually like as an interesting plot of storyline. But Solo Leveling is definitely the #1 anime right now that is on Netflix. Yeah, Robert, what are you watching yourself? Sounds like you're also like your animes, huh?
Sounds like it. And then Robert goes, ha ha ha, Sam, yes. And then if there is a trade you are waiting for, you also dream about it. That is true. Missing the trade.
Yes.
Oh man, back in the days, if I missed a trade, it would annoy me more than if I got stopped out. Do you know what I mean?
I 100% understand that. Like, absolutely.
Oh.
And there was a point where like I would literally I missed trades for a few consecutive days, and I wrote down in my notebook And I was like, in primary school when you get punished and you're told to like write on a book over and over again, I will not do this again. I will not do this again. Like that's how I disciplined myself in trading. So like when I was overtraded before, I would sit there and I'd be like, I will not overtrade. I will not overtrade. I will not overtrade. And then I would also do, I will follow my trading plan. I will follow my trading. And I'll write it like over and over and over and over again, right? Until my hands got tired. And then I put a timer. So I like, you have to do this for half an hour, Walter. So I like set a timer for half an hour and I sit there and I write over and over and over again for half an hour. Wow. So, so when I missed trades, I did that same thing. And I was just like, I will pay attention every time I'm in front of my chart. I will pay attention every time I'm in front of my chart. Because that was something I sometimes struggled with. It's like, I would be waiting for a setup and then I'll get distracted. I used to think I had ADHD. And then like I would start, I don't know, still watching something on TV and I'm like, all right, let me just go and do something. And then I'll go away from my screen and then I'll come back and I'll see that not only has my setup confirmed, it's triggered in my optimal entry point and it's not running away from me. And I'm there like, I missed it. And I hated that feeling so much. Hated it.
I know exactly it. And Matrix says controlling emotions is the key. Absolutely. Absolutely. Discipline, emotions, the whole psychology is one big package. And that includes risk management, I would say, pretty much. That's part of psychology, I think. Absolutely is the key in trading. 1,000,000%. But yeah.
Oh, look at that. Bitcoin wants to, come on, just slow your ass down. It's already hit that imbalance, but a bit prematurely. Just chill. So I still need to wait for this candle to close. So I can't, until this candle closes, I can't actually place an order.
Right, I'm with you. Well, what time frame is that? 15 minutes, I think. It's quite blurry.
Yeah, 15 minutes.
15 minutes, yeah. Oh, it says it in the screen in the middle. I don't know why I didn't look at
it. Yeah, it says it right there.
I'm like looking up at the time, I'm like squinting my eyes. Oh dear. Robert replied, he goes, I haven't been watching any lately, focused on learning, trading, and now getting ready to start 3D modeling again for some 3D printing. I hear solo leveling is good. I'm either stating that one or Shangri-La Frontier.
Save Shangri-La Frontier for later. So solo leveling is ongoing. So I'd say watch solo leveling up until the most recent episode. It gets released every Sunday. Right, so watch solo leveling until you're caught up with it, right? And then you can start on Shangri-La Frontier whilst you're waiting for the next solo leveling episode to be released on the following week. But definitely, like solo leveling is a lot more interesting than Shangri-La. That's my personal opinion, anyways. I don't know what kind of anime. Some people like more action based. Some people like more sports based. I don't know what kind of animes you like. But if you like action based anime. This also reminds me of a bit of like Modern Warcraft as well. If you were into gaming back in the days, it's like you would absolutely love it.
Nice.
This is looking good. All right, so with gold, I was actually going to touch on this. There is a setup that will take place in New York. It will be very similar to Bitcoin. So what I mean by that is, price is now broken outside of this range. So this is the pre-New York open range. So at this point, we're now waiting for a new swing high to form. Okay, so now price is also broken above this high. Therefore, the next area of interest is going to be the all-time high. So now we're anticipating Bitcoin, or rather I'm anticipating Bitcoin to actually take out the highest high and perhaps give a new high. Interesting times ahead. So this setup will be simple for this break. It will be a swing point created. After that swing point has been created, then the idea is you want to go long. Where? Go long at this imbalance, at this order block. Or if you want to have a bit of confluence, there is an imbalance within the block. So you could potentially even take your pending order at that imbalance. Stop goes below the range. You could have it either below this initial low, or you could have it below the lowest low. Either row is good, right? And then, so trades like this. So personally, I'm not going to leave this overnight. I'm going to wait for this tomorrow. if gold gives a new high in New York, that would be very surprising. It doesn't typically do that. It sometimes likes to do it in Asia or London session. But I'm gonna wait on, and when I say tomorrow, because I'm based in Asia, so right now it's night time for me. So tomorrow morning for me is a new day. So it's an Asian session. So yeah, so the way that I'll trade around all-time highs, I don't usually have a set target because I have no idea how long price is going to keep on rallying for. And there are times where like price can keep on rallying for absolutely ages. Now, my next ultimate target for gold, my next ultimate target for gold is $3,000. Like, I think eventually gold will get there. Maybe this year, maybe next year, but eventually gold will get to $3,000 per ounce. And that would be something that, you know, it's going to be in the papers. So, so with all-time highs, I would have an open order. I wouldn't have a set target. But what I would do is I would monitor every 15 minutes candle close. So as a rule of thumb, this is how I would take a profit. So the moment price breaks above the high, I would wait for 3 successive 15-minute candles. The moment I see 3 successive 15 minutes candle, I'm closing half of my trade and I'm moving stop loss to break even. And then I go to the 30 minutes time frame. Now I need to also see 3 successive 30 minutes candle as well. If, for example, I see on the 15 minutes 3 successive bullish candles, but only 2 successive candles on the 30 minutes, then I wait for the third bullish candle on the 30 minutes to close before I close the rest of my position, right? Now, if you study candlesticks, you're going to notice that it does this weird thing where an expansion is usually a minimum of 3 candles, right? So if you look at this, for example, if you look at this expansion, it's a minimum of 3 candles, right? Sometimes the expansion can have more than 3 candles, but if you have more than 3 candles, it's usually a multiple of 3. So it's going to be 369. So in this case, we have 1, 2, 3, 1, 2, 3. So 6 candles, right? So that's an expansion. And then we have another expansion. In this case, right there, we have 1, 2, 3, 4. And then we have another expansion, 1, 2, 3. Again, we only counting the bullish candles, and any like trap candles in the middle are usually ignored. So this is just like a general like flow of price anyway. So you have again 1, 2, 3. That's an expansive candle, and in this case we have another one, 1, 2, 3. So again, on the 30 minutes candle, after this third 30 minutes candle closes, we're probably going to see some form of contraction, right? So again, that 1, 2, 3, that's important for me to identify my expansive periods. Again, this isn't like a hard rule. This is just like a general rule of thumb of how I also see candlesticks. There's a lot of like, honestly, like when you're trading without a lot of indications, you notice a lot more about price. You notice these patterns a lot easier. You can see when the market is in an expansive phase. You can see when it's contracting, and it's a lot easier to be patient through these sort of expansions and contractions. So I hope that sort of like gives some sort of a insight anyways into how to trade around new highs in the market or new lows in the market being created.
Awesome. Yeah, 3,000 definitely. I mean, it's going to happen, and one day you'll hit 4,000 and 5,000. Gold will always, it will go up, right? Unless they magically find a massive, I don't know, unless a meteorite hits us and dumps hundreds, thousands of tons of gold on the planet, it's always going to be a valuable, appreciating asset. So
because it's a limited commodity. There's a finite amount of gold in the world. We can only mine so much every single day with our limited resources. And every gold that has ever been mined in the world, because it doesn't diminish, every gold that has ever been mined still exists in some form of other, whether at the bottom of the ocean or in a bank vault somewhere in the world, or forgotten in some sort of in a cave where pirates would have left it behind from bounty hunting or whatever. So it's a finite commodity. It doesn't diminish. It's always going to be around. Hence why it's always going to have some sort of value that nothing else, like there's no other commodity, there's no other currency on this earth that would ever be able to simulate what gold can provide for us. Not even Bitcoin. I
mean, it's actually useful as well. It has so many different uses as well.
100%.
So, yeah, absolutely. Let's have a look. I'm seeing. I'm not seeing the perfect setup. I am seeing. Sorry, my headphones just blew up again. Let me share the screen. I'll
Yeah, I just unshared mine.
Present. I think you got another question from Robert. He goes, Walter, did you watch Vinland Saga?
Absolutely, I loved Vinland Saga. I rewatched it. Actually, I watched it more than once. It was so good. Highly recommended. Yeah.
Very nice. Right, so we are kind of, like I said, there's a good chance those sellers would start defending that position. You can see that they're desperately trying to defend it. Didn't really work out too well for them. So there could be a potential kind of trap setup occurring. The only thing I don't like about it is where we are. We're in the middle of the range, right? And we're on the point of control. That's the only right. Otherwise, it wouldn't be too bad of a setup, right? Because you've had all this volume, right? These sellers came in trying to defend that area here, right? But that they didn't actually manage to do it. We got 2, 3, 4, basically 5,000 contracts. If it goes against them and we start seeing those really heavy buy numbers occurring up here, there is a good chance it can push up, right? I just don't like the fact we're in the middle of the range. I wanted to see that happen lower down, right? And the fact we're literally on the point of control, the most heavily volume traded area of today, which generally means if there's a heavy volume, generally means there's a lot of people willing to transact in that area. And if there's a lot of people willing to transact in that area, it's always going to be choppy, right? Because you're going to have buyers and sellers both eager to transact in that area. So it will never be such a clean movement. It's always the lower volume areas where people get trapped. That's when you see the nice clean movement come in. So it's not perfect. I think there's going to be quite a bad battle here. The sellers are not going to give up that easily. Buyers are going to start trying to jump in. It's going to be quite a nasty, choppy area. As we're literally in the most heavy volume traded part of today. And even yesterday, the most heavy volume was really not that far away. This whole area from here to here is just choppy, right? It's going to be choppy. And you can see yesterday it was choppy in there. Today it's choppy in there. I want to be trading outside of the really heavy volume areas, right? Because I don't want to be involved in that battle. I kind of want to be involved where there is no major battle, but there is still people, getting trapped and making poor decisions. So yeah, I don't think the buyers are going to push it up any minute now. I don't think the sellers are really going to push it down. I think we're going to go sideways for a little bit. We're going to have a bit of a range, and eventually someone's going to win. But I can't call who that's going to be from this moment in time. I can only react. What I can show is the trade I did yesterday, because that was a perfect trap setup. My bad. Had a Matrix come in with a comment. I heard Pakistan found a gold treasure recently. Might push the price of gold down, Walter. You might want to start shorting it.
Let's see how big this treasure was.
Yeah. Absolutely. All right, let me remove that. Stop screen, share. Now I only caught towards the end of it, but I'm pretty sure I can just do the whole screen share as a whole, entire screen. Entire screen. Add to stage. It's going to look a bit weird. Right. So, move that out the way. I don't know what this is. Don't know. Right. So I've literally just recorded the screen. I've got this little graphics tablet I bought. I'm really excited to. Oh no, there it is. Really excited to try this out.
Excuse me.
So hopefully I can show where I entered. I'm sure I give a bit more. Actually, show the area. Do I do it? Where is it? Oh, you can see it anyway. Okay, so surely I showed it in a bit better. Oh, that's very annoying now. Why did I not? Okay, it's kind of a little bit off screen, but you can kind of see it. Is this the right video? Did I record a better one? I'm so sorry. Give me 2 seconds. I'm sure somewhere I zoomed out. Yeah, here it is. I did zoom out. I knew I zoomed out somewhere and actually showed my entry. Oh, come on. Don't. Go back there. Go back there. All right. I really didn't record it too well, but essentially, you can just probably about see it. There was lots of heavy buying coming into that area. We had this ranging market, right? Kind of just going sideways for a bit. It was just literally bouncing up and down, and it was ranging, you know, a bit further back as well, but it's off screen. And then we broke out of that high, and we had all these buyers come in, breakout buyers, you know, they're all trying to buy in that area, and it very quickly started reversing on them. And you could see them all dropping out of the order, out of the market, you know, 600 contracts, 1,000 contracts, etc. Instantly jumped in, and it just boom, 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 really nice and smooth, just went down with no hiccups. And that's exactly what I'm looking for, right? I'm looking for those people trying to buy a breakout or sell a breakout, you know, and getting trapped and then taking advantage the moment they do. And then I got out pretty much around here somewhere. I got out, so I pretty much hit exit here somewhere. It's a bit slow. So I exited here again, reason being this right here, right? So we had obviously all the sellers who joined me coming in, and then they're exiting. Other sellers are all just getting out of their position because we kind of hit a previous low. So naturally, people are going to take profit there, right? It just makes sense. And you can see them exiting the market. So I just joined them in the exit, decided to get out as well. And that's pretty much it. So it's like, it's actually really simple. You just have to be quite patient when you're, let me just remove that. You have to be quite patient when you're just waiting for the setup, right? And it's going to occur in areas where a lot of people are going to be trading breakouts and stuff like that. That's where it will occur. It's not going to occur in the middle of a range. It's not really going to be the kind of area where you expect people to get trapped. I mean, it can happen, but it's not the ideal place, so to speak, right? Oh shit, sorry, I shouldn't be swearing. My screen is not sharing, is it? Let me go back. There we go.
Oh, are we not allowed to swear? Oh.
No, I mean, it's fine. It's fine. It was one little hiccup. We shouldn't, but you know.
I think I've said a few unsavory words.
It's all good. But yeah, update. There is no update, sadly. Those sellers defended it quite well. They defended that area, as I said. But notice how long it took for it to start pushing down a bit, right? Because again, we're relying on people jumping in. We're not relying on people being forced to get out. So the reaction to the market is going to just be not as snappy, right? You want that kind of that pop, and that pop happens when people are forced to get out in masses, right? When they're all just, they have to get out, not taking profit, because taking profit, you're not forced to get out, take profit. You're only ever truly forced and squeezed out when it's going bad, when it's going against you. That's when everyone is forced to get out, right? So that's why trapping people is the best kind of setup to trade, because you get the most quickest and harshest reaction to the market, where kind of waiting for people to jump in, it's going to take some time. You know, it did take some time. It took, I mean, this is 15 minutes. It took at least 20 minutes then. you know, from when it actually got to this area to it now pushing down and the sellers defending it. You know, I mean, it's fine. You can still trade it. It's not, you know, especially if you see heavy volume come in, you can still trade it. That's not a problem. But you are gonna be stuck a bit longer. Whereas with the trap, couple of minutes, the moment they're all out, it just floods. It just boom, boom, boom goes, because people are forced to get out rather than, you know, deciding to get out. But yeah, we've got about 5 minutes left of this session. I'm going to look at the comments again. Robert says, good thing it wasn't more oil, or some country might decide they need freedom today. Yeah. Absolutely, absolutely. Oil-rich nations need a lot of freedom. Oh, that's funny. It's a family show, Walter. Lol. I'm assuming
it's a family show.
one of the anime. I don't know. Honestly, I know nothing.
No, because I said about swearing. Like I said something unsavory.
Oh.
And Robert was like, "It's a family show," well, as a joke.
Yeah, absolutely. No, it's all good. It's all good. I think it's more just YouTube. They don't like people saying any bad words.
Yeah, they'll flag it, definitely.
I'm sure the viewers don't mind if the odd word, you know, odd swear word comes out. It's not a big deal. I mean, we're all traders. How many times have we screened at our computer?
Right.
It's happened. We've all.
I mean, it's happened to me this week on quite a few occasions. Just like, what are you doing? By the way, gold is now broken above the prior high. It's now sitting above the highest high. It's now created a new high of 2.9. Crazy stuff, man. Crazy stuff. I mean, a bullish gold, by the way, that's not always pleasant news for global economy. It means people are fearful. It means people are losing faith in the dollar. People are losing faith in established regimes, and they're putting their money into a safe haven. And gold, it tends to be that safe haven. So yeah, the fact that gold has been bullish for like the past few months hasn't actually looked good for the economy, for inflation. Like people are talking about obviously what's going to be happening over the next few months. So yeah, it's an interesting time.
Yeah. Robert says, "Oh, nice. Gold hit my stop loss and then to my target." This is why I hate gold.
Why did you say? Why did you stop loss? Where did you enter? Yeah, well, with gold, it's about you got to respect it. You know, you got to enter. Your entry has to be. You cannot try and get in gold in the middle of when it's doing something, because then you get slipped out. You got to get into gold like right before it makes the shift, or right about when it's making the shift. Get in at the right time, because when it shifts, you're safe. You know, you can put your stop loss to break even, whatever. But if you're trying to like chase gold in the middle of the run, you know, it will throw you off. It will stop you out. It will pull back and then keep rallying. So the trick with trading gold, you really have to be disciplined, and you really have to refine your ability to enter at optimal entry points and place your stop loss in the most appropriate place. You know, don't try to aim for like 1 to 20, 1 to 15 by setting tight stop losses, because you're going to get stopped out more times than you should. But yeah, you gotta trade gold with respect. You gotta be patient. You just gotta enter at the right places. That minimizes premature stop outs.
Yeah, absolutely. Gotta respect gold. Have to watch the distance of the swings. Yeah. I mean, you're absolutely right. A few times that I used to trade gold until I just kind of settled with the S&P 500. But yeah, it was always for me. It would either work out really well or go really bad. Do you know what I mean?
Yeah.
It did have the I think what people love about gold is when it moves, you know, and it can hit your take profit in like minutes sometimes, you know. It just boom goes. But when you're on the wrong side of it, gold, you hate it.
Yeah, no, absolutely. You in the same way you hit your TP fast, you also get stopped out fast, and I like that. You know, I don't like when price takes ages to stop me out. If you're gonna stop me out, stop me out. I want to know within 15 minutes. I don't want to. I don't want you to. I don't want a position for an hour and then get stopped out after an hour. That's frustrating. I'd rather get stopped out fast. I know that I'm in the wrong direction. And if you're gonna run, I'd rather it shift and then I know I'm in the right direction pretty fast.
Absolutely, absolutely. Well, guys, we've got about 10 seconds. Last comment was Robert. I haven't just decided to since Walter was talking about it. Okay. Well, that is it. That's the end of this session. Again, sadly, no trade, but we are going to be releasing. So a lot of the coaches are going to start recording their screens when they are taking trades. And we're going to be releasing like short 10, 20-minute segments of them taking trades. So if I do take a trade today, I'll be recording the screen and making a video about it, and you'll be able to actually watch it on YouTube as well. So because we realized trying to get trades on the live session can sometimes be a bit difficult, because if it doesn't happen, it doesn't happen, right? So yeah, we're still going to, try and show you that part of it as well. But guys, everyone, Matrix, Robert, I think we had Sarah, a few other people, Sage FX. We had quite a few good comments coming in today. Thank you all for watching. Stick around. In 15 minutes time, we got the midday momentum coming up. So yeah, more trading fun. But Walter, always a pleasure.
Always a pleasure, Sam. Thank you so much, guys. Robert, thank you so much. I always enjoy talking anime. And appreciate everyone else for plugging in as well. Hope you guys got something from both Sam and I tonight. And happy trading for the rest of the session, I guess.
Yes, definitely. Happy trading. And yeah, we're signing off. Take care, everyone. Thank you.
Take care, everyone. Bye-bye.
Hey, Bruce.
Hey, Howard. How are you?
I'm great. How are you?
Very good.
Nice to meet you.
Nice to meet you. I've heard your name floated around for many years.
Oh dear. Infamous. That can't be good.
All good. All good, though.
We're
waiting for one more person?
Yeah, Paul, I believe. So, yeah. What are you going to be looking at?
Well, I have a bunch of things that, I think that I don't know if we're going to get to all of them, and other people may have them as well. So I've got Bitcoin, S&P, Euro dollar, dollar yen, and gold. But I think the Euro and S&P more important.
Yeah. Yeah. I'm I look at all that stuff as well myself, but I'm going to be focusing on the currency.
So I mean, I don't want to repeat what someone else is doing necessarily, unless I'm going to add something, so we can.
Yeah.
I don't know that we have time to get to all those anyway. It seems like we may or may not. So that's up to you. I'll follow your lead.
Cool. Sounds good to me. Are you kind of long-term, short-term focused? What kind of time frame do you like to look at?
I do day trading, and I do short-term swing trading, anywhere from 1 day to roughly 3 weeks, let's say.
Okay, cool.
But primarily, I'm looking for the larger time frame to support the shorter time frame.
Yeah.
And then trading the shorter time frame, the hourly or the 2-hour or the 4-hour.
Yeah, that makes a lot of sense. I guess I'm kind of similar, although perhaps not as long term as some of your longer term stuff. I'm really looking for maybe an intraday swing, or the trend for the day, or maybe the trend into the next day's close. But I use the kind of longer term stuff to give me filters and things.
Yeah, so that's the same for me, basically. I'll do. Like, for example, I shorted the euro last night. I took some profits on the euro, but I'm going to add to the short, which I'll talk about, on this bounce potentially, right? So that was a short-term trade, and now it kind of continues, right?
Yeah. Now that's been an interesting one of late. Big, massive breakout.
Yeah, it may not, and maybe a bad short. We'll see, but so far it's behaving properly.
Yeah. Arguably, it got a little bit overextended the last day or two. So
yeah. But just let me know when you want me to talk more, and I can do that. We're live right now.
Yeah. Let's see. Okay.
Yeah, I believe we are. So maybe I should just maybe you want me to start with the euro?
Yeah, go ahead. Yeah,
I'll just I'll go into a little bit more in depth maybe. Okay, so obviously the euro's been really, really strong. It's headed up, broke through the 200 moving average here. First, it broke out of this bottom consolidation. It broke through the 200. So it's moving, obviously very similar to the dollar, the opposite direction. And then it broke through potential resistance levels, a 62% retracement, and got all the way up here to previous resistance, which is also.
Do you want to? Sorry, do you want to share your screen?
Oh, I'm sorry. I apologize. Yeah. Thank you. That would help, certainly. Let me know when you got it.
Sure.
Okay, there you go. Got it?
Here we go. Got it. Yep.
Okay, so we've got this big spike, right? But eventually it's going to run out of steam. It's not going to go up like this forever. And so it starts to run out of steam right here. And I thought we might have a short here with this bearish shooting star candlestick pattern, but it never triggered. And instead, we had a continuation that took the form of this rising parallel trend channel. Hey, Paul.
Hey, how you doing? Sorry I'm late.
Good, no problem. Okay, so we got the rising parallel trend channel, And I talked a little bit about this yesterday, and we just happen to have the 220 moving average identifying support tested 1, 2, 3, 4, 5, 6, 7, a whole bunch of times, right? So it's a good level. And then we broke down through that last night and below these lows. So the combination of those gives a potential short signal, because this is this is kind of similar to a rising wedge behavior, but not quite as bearish, we could say, right? Because you have a parallel channel. So, but it certainly shows a slowdown in momentum, and once momentum slows, eventually it turns, and that's what we started to see last night. So now, just very quick. So the other component of this, okay, or what are the targets potential, or how I'm going to look to maybe manage this on the way down, and my stop would be up above here. And by the way, okay, because that's not what should be happening. That's not what I'm anticipating. So we have some potential support down here near the 50 at 1.077. And that also potentially completes, if we look at this like a wedge, we could say that completes the target, because the beginning of the wedge completes the target. Nevertheless, it doesn't mean it's going to stop at that point. So I think we could go lower as well. And, whoops, sorry. But I'm going to see how it comes down to determine how I might manage it. In other words, see what the behavior of price is as it comes down, approaches potential support, and so forth. So what might that look like sorry about that. What might that look like, for example, going back to the euro? So because it would be perfectly normal to find support here, rally nicely, and then turn back down again if this is a reversal, right? So that is going to vary, and sometimes I'll split a trade. I'll take half off here and then hold some, and then look to add on the bounce, because I think this may have more downside to go. And I'm watching for any indications that would tell me maybe that's not correct. One of the indications would be, how does it sell off? And then how does it behave around potential support? So we could say a minimum target on this then would be a 38.2% fib retracement at 1.0723. Okay, so that's kind of how. So I have that basic plan, and then I'll, I may adjust that plan depending on how I see the behavior of price as it progresses. And you can see here we also have a bearish divergence. That's part of that setup as well down here on the relative strength index. As this went up, we have a bearish divergence. So this is actually a very good example of a bearish divergence that is really, in many ways, an ideal bearish divergence from my perspective, because you have a setup with it without that, and then this enhances it.
Yeah. Yeah, I tell you one thing, I don't really get on that well with RSI sometimes, because I like it when you get those divergences, but I have trouble knowing when the divergence has completely wound itself down. So I know that in a bull market, typically you'll see 40 to 50 as support zone rather than 30 on the RSI. So what kind of tells you on the RSI that the pullback is done?
What kind of what? I'm sorry.
What kind of action on the RSI would tell you that the divergence that is calling a top has unwound?
Right. So this was okay. So let's start with the daily. So the daily is not showing divergence. Okay. But the daily is showing overbought, which doesn't mean that much, particularly in a trend like this. But on the 4 hour, the divergences. Okay. So that is just, I showed momentum declining. Bullish momentum is declining as price continues to rise. So the level of demand is diminishing. So we have lower swing highs here. See, we have swing high, lower swing high, lower swing. So we have a downtrend developing, and we have an acceleration of the downtrend as this triggers. So now they're beginning to get into alignment.
Yeah. So I guess for me, where on the RSI would be a buy signal? when the divergence has run its course. Yeah, so obviously you get a divergence, you get the overbought RSI when the market's really got momentum, and then you get a pullback like a minor fourth wave, and then you get the push to a new high, which is not confirmed by the RSI, which we had, and then you start to get a bit of a pullback in price. So I guess my question would be, at what point has that divergence completely done its job, and you've gone from, say, overbought to, say, underbought?
That's a good question. Do you want me to, Bruce?
Well,
do you want to have a go at that?
Here's what I'd say. I don't look at it that closely or that frequently. In other words, if it's obvious in there, then I'll use the RSI. If it's not, then I just leave it alone. So I go by price, and I look to see if the RSI is negating what I see in price or supporting what I see in price. If it is not, then maybe it's not part of my equation.
Gotcha.
To make that decision. So I'm not always using RSI. You know?
I mean, for me,
and I'm not using it for a signal.
For me, the time frame obviously is a factor, because if you've got bearish divergence on like the 3-day chart, then the move is probably going to be quite like Bitcoin at the moment on the higher time frames. It's got some bearish divergence which is still playing out, and obviously if it's on those higher time frames, it's going to be more of a steeper move based on that divergence, because obviously the higher time frames are more powerful. And then obviously if you see it on the 15-minute, it will be, you know, the second you flash some bullish divergence up, which will probably be in like an hour's time, then that's the end of the move. So I mean, that's how I approach it, looking for a counter divergence or the next support line down, and just being aware of what the time frame is, because obviously divergence on the 1-minute time frame RSI means nothing in compared to the weekly. So that's what I would say.
Yeah. Now, just to finish up really quick, going back to the daily, we have other levels that have to be watched on the way down, like the 200 moving average here that aligns with this previous low area at 1.079. So and then the 50 moving average down here. So that would also be added to the potential target levels and also used to help with the stop. So for example, this is on the 3-day. I'm sorry, I want to go back to the daily. So the high of the day, they move my stop to that, for example, as well, once the day's complete, if I'm going to continue to hold it. I'm not expecting it to come way down here. I'm just looking for a relatively shorter drop at this point. So should I look at, you want me to look at the S&P now, maybe?
Yeah, let's do that. You're on a roll. Let's go.
Or actually, let's go to Bitcoin first. So there's not much more to really add in Bitcoin, I would say. You know, we kind of got choppy behavior at this point. It is respecting support around this trend line with the low of 76,599, and it's respecting the resistance zone around the 200 moving average at 83,634. It's still clearly in a downtrend, and that downtrend is accelerating because this may end up being a lower swing high. It's not yet, of course. It has to go below yesterday's low before that happens. But we could also look at the 20 moving average that defines the acceleration in the trend as well. And you can see here as it progressed, and I mention this because it's going to be the same no matter what, right? Whether it's Bitcoin or whatever, the same thing is going to be true. As we turn over, it breaks the 20, doesn't mean a lot. Pulls back, tests it as support. Now I'm going to pay more attention because the market is telling me it's recognizing that line. Recognizes again, breaks out, fails, resistance. Now it starts to accelerate to the downside, test the zone. It's an area of resistance. It doesn't have to be specific. Here and here, and we get a continuation of the downside and an acceleration to the angle of descent. But it's encountering potential support zone at the line, which is not that significant the way I consider it. And then we have this zone at the top area of this previous base, starting around 72,140, and then going down roughly here, just for a general quick 65,351 down at the lower end of that range that I've identified, largely based on these highs. Okay, so going to the weekly, so we can see it a little clearly. I'm just identifying this high to this high. That's all that is. Okay, so but significantly, we have the 50 moving average on the weekly that is down here, that is almost tested about 75,545. So out of everything, that's going to be, I would say, the more important thing I'm going to watch at this point if it keeps going down. Because it was tested successfully. Here is support, here is support. And if it's broken and price stays below it, that will be a change in behavior that I want to be aware about, because it could lead to a more significant continuation.
Yeah, because we've got, I mean, I'll talk on this a bit later in a bit more detail. But yes, we're obviously, because we're right up against the primary trend, if we do get more selling pressure, then obviously that's a more significant bearish signal. Because currently right now, ignoring what's going on in the world, it's a buy opportunity, right? We're still bullish. We're in a, we're just coming down to support. But if we do get any more selling pressure and you enter and we start putting candle body closes on the daily chart as an example into that range you've identified, which is obviously based on the last bull run's high, which was 69K, and then the new all-time high back in March 2024, which was about 73, 74K. So we're still bullish, but you're right. There's obviously going to be a problem if we go down much further, for sure.
Yeah, I got to say the last.
No, it's all, couple of one final thing. It's also, and so I don't disagree with what he's saying. It's really a question of how specific you want to be on your entries and so forth, right? In my opinion. So but the other thing that's important is every time we rally to new highs, we drop down first, spike down, and not spike, but we drop down, and we're doing that now. So this is certainly, I would agree, this is in the area of a potential buy for a rally to try to go to a new high again, or at least challenge resistance anyway.
Yeah, if the conditions allow.
And so, and then going back to just finally, the RSI, you can see the RSI started to show some bullish divergence here on the daily.
Which is
why? Because we have a higher swing low.
Yeah.
So it's not a lot yet, but it's something, And going to the 4 hour, we could see it even more clearly.
Yeah, and this is obviously, as we approach that range, hopefully we're going to start seeing, obviously, we're going to see more people coming in and trying to front run this well, hopefully will be a nice soft landing and then a bounce, but we just need what's going on in the world to give us the conditions to.
Well, let me expand. Let me just comment on what you've been asking about, and we discussed this a little bit yesterday too, about what's happening in the news and all that kind of thing. There's always something. This is how I look at it. There's always something going on, and I don't care much about what's going on or why it's going on necessarily, unless it's like something long-term significant. Because, and then I'm watching the chart to tell me what to do. However, having said that, if we get a significant reversal signal and it's associated with some, let's say Trump or the administration does something very supportive, and it's responded to supportively by the market, then of course that's something I want to know about. But I'm not doing too much to try to figure out ahead of time what's going to happen. But that's also partly because I'm trading a lot of things. I got a lot of stuff going on. So ideally, I would like to do that.
Yeah. No, I mean, it's about the I have obviously news source and feeds, which I glance at every day, and I have groups and so forth, which give me the information I need. Because you're right, it's to every given day to trade successfully, I need to have 4 or 5 different Bitcoin charts. I need to have with different perspectives. The same with Bitcoin dominance, total 3, whatever is going to give me the information about what the rest of the market is thinking. And it's a full-time job. So we've got to, when you're trading multiple instruments, that can be a lot, because just trading crypto, it requires just a tremendous amount of effort and to try and make sense of the news as well. It can be maddening, and sometimes you just have to, like this weekend, I just switched off because it's just like, it's too much. I need to wait till Tuesday, and then I can maybe get a perspective on it.
Yeah, I got to say, just looking at this crypto, this Bitcoin chart, along with the S&P and the NASDAQ, all these other ones, looks like we had a nice couple of days trying to go higher against the trend, and maybe today we're starting to break down again. It could be a place to slap it for new lows.
Yeah.
But yeah, once we get down there, obviously, as you say, you've got big support down there. But I think the trade for the next few days would be to be short, I think.
Yeah, well, Bruce, do you mind if I just jump on Bitcoin and just chat about that for a minute, and then we can go back to the SPX, just so we can.
Yeah, sure.
Does that work for you?
Yeah, absolutely.
So we're not whipsawing everyone with different instruments. So
you're looking at a lot more things in crypto than I do generally.
No, but I mean, everything you're saying is exactly the case. And as Howard said, we're talking about shorts, which is kind of what I want to talk about briefly, as opposed to the big picture today. But just speaking, can you see my screen okay?
It's coming up.
Yep, all good.
So just speaking of divergence, this is obviously the monthly chart, and we've had bearish divergence, just to follow on from that discussion. And this is it's playing out in slow motion, right? And this has been going on for since December now, when we first saw this. So you'd expect the bearish divergence to at least put us down into this pocket, come back down. So obviously the divergence on this time frame is still playing out. It wouldn't do on the 15-minute, that would have been done. But just to talk about kind of that, this is obviously what we're looking for as an end for the divergence, which just happens to line up with these kind of ranges, which Bruce was talking about. So yeah, this is obviously a straightforward chart. Bitcoin, we're underneath the 200 MA, bearish, as Howard said. But how can we trade this, right? If we want to trade it, what are we going to do? So this is just Bitcoin 30-minute. Just keep it really simple. Not resistance, not support today. It's just, where are the sellers? Where are the buyers? So we've got the 200 MA, which is giving us really good confluence at this level, along with obviously an order block, which is hidden underneath there. And that's obviously around 83. So we've also got talking about bullish divergence, we've got some short-term bullish divergence on the 30-minute, as we've been talking about. Now, this move obviously is just probably going to give us a little bit of a bounce up here maybe, and that will be the divergence playing out potentially. But this is what we want. So you're not going to short it now, because we've got some bullish divergence, even if it's the 30-minute. And we're obviously wanting that bullish divergence to push the price action back up into this resistance area, which would be a great potential place for a short entry. And obviously, the move from here to here, as we have just moved, is about 8%, and that's nothing to shake a stick at. But obviously, when you see some order blocks, and we switch time frames, and you start seeing some order blocks, you need to be wary that really, if you see some order blocks on some of the higher time frames, really, because of the way the market is, you may not want to necessarily wait to take profits down here, because this could again just keep us in this upper range. So be aware of multiple time frames. This is probably the move more than this to this. But what do we need to see? Firstly, you don't want to be entering here for a short trade. You want to be up here. Really straightforward. The market is very, very hesitant, and you need to have more confluence than you usually would. So this is definitely where you want to enter, simply obviously because if we do reverse in the opposite direction, we're most likely going to be playing around with this area, which will give us some no loss exit points. But how do we get the advantage here? Well, we need to, of course, be patient, and we want to ideally ask yourself as a trader, what do we need to see? What do you need to see to enter this trade to mitigate risk? Just jumping up here and putting a sell order here for a short and maybe taking profits here or down here, that's not enough, right? So speaking of divergence, because everything's so hesitant, even though you'll have the 200 MA as resistance, this is the 1 day sweeping in. So this isn't the 30-minute, this is the 1 day 200 MA. So it's significant. But we want to maybe, if it's up here and you see the price action come up and you're all ready for a short trade, a little short trade out of Bitcoin, what do you need to see? I want to see the RSI, or the stock RSI at least, oversold. I want it oversold, at least on the 15-minute chart, right? We need that confluence. And then ideally, you want to wait for a bit of bearish divergence and try and spot that. So if you can get the price action up here and you can spot some divergence and you've got maybe oversold conditions on the 15, 30-minute chart on maybe the stock RSI, then that's your trigger to enter. Anything other than that, I would be quite cautious, but definitely scale in. And the key point here, and guys, jump in if you've got an additional perspective. We are obviously in the territory, as Bruce said, that we could be reversing as we are approaching, these long-term kind of support levels. So you need to be quite in and out, quite, the support's just below. So any kind of short trade, you got to bear in mind that buyers are starting to try and enter. So really additional confluence, extra confluence when the weather is bad, but definitely this is the short area. This is the area. But if you see the 200 MA and you see the price action, this is the 1 day. If you see the price action jump above the 200 MA, again, just be wary that we're not about to move up to this range. So ideally, double top, not just a touch. We want to see a weakening trend once it hits this trend line. So that might look like this, maybe, and there's your selling opportunity. But extra confirmation, extra confluence, and then have a look at the multiple time frames to see where the buyers are sitting for, depending on the duration of your trade. And obviously it should be just quick in and out at the moment. Any thoughts, guys?
Yeah, can I just quickly, while we're on Bitcoin, then I'll hand it back to Bruce. Yeah, just quickly. 1 second. Okay, let me know when it comes through. Okay, can you see it?
I think it's just around the corner.
Let's see. Can you see the screen? Has it come through?
I'm glad you're in charge of the screen.
Yeah, got it.
Sorry. Let me try again then. Yeah, I was. Let's try again. 1 second. Here we go. Window, entire screen window. Let's do that. Share that. Okay. Yeah, give us a shout when it comes through.
Got it. Thanks.
Cool. Okay. Yeah. So just looking at the daily, obviously we've had this kind of downtrend from the major high. I like these kind of 2 steps and a stumble type things, where you get a big thrust in the direction of the trend, and then you get a couple of days trying to go higher, and then you start to resume on the next day. Yeah. So, and I think that's essentially what we're doing today. Is we've done the 2 steps higher against the trend, and now this is the day on which we cross over and we start this another crack at the lows. Yeah. So it could be one of these things where you kind of sell the break. Obviously we've got that big support level, I think 80.60 or so, this one from yesterday.
Yeah.
So I think if you bust that level, which we may do today, then that will be the kind of way we go. Just throw out your oscillators and like this kind of breakdown here, it just goes. So that's something that could be a potential trigger level. I know Paul, you're looking for perhaps a bit of a push higher first, but that might be the kind of signal to say, look, we're going now. Let's not miss the move lower, kind of thing.
Yeah, I mean the idea behind do you mind if I just switch back for a second? Is that all right?
Sure. Here we go. Yeah, back to you.
I think the idea is, and the issue which we've got here is, obviously, we've got, as we said, we've got a signal here. We've got this, ascending triangle, which is broken lower, but then we've got, we had some bullish divergence showing up on the 30-minute, which is going to put sellers off at this point, potentially, right? So that's the premise for, and you can see obviously they've got the idea because an order block's appeared about on the 30-minute, and we don't want to trade against that just yet. And the idea is, of course, because things are so hesitant, and as we are approaching the long-term kind of, this kind of area down here is long-term support. Very important when whatever we're doing to try and make sure we're coming at, these key kind of sell zones and these key buy zones, so we have a clear advantage in a very difficult trading conditions. If things are a little bit more, say for example, we were higher up, and we were having, it would be a more straightforward trade in terms of short. We'd wait for a breakdown of something, but we're not up here, we're down here, and ideally, even if we might continue lower here, this gives us control. This gives us confluence. We're going to join a short trade with other sellers. There's an order block there. And we're trying to, obviously, any trading in these conditions, which is very challenging, we need to have so much more confluence than we typically would. So whereas some people will be, waiting for 2 or 3 signals, at the moment we need to be waiting for 4 or 5. And those additional 4 or 5 signals can simply be entering in an order block, a significant one, and a significant resistance. And if it doesn't come up, and it continues lower, then it's a no trade. But we can't chase it. We've got to let it come to us and give us the most control over what we're doing. So if we do get a strong recovery now, as Bruce said, there is some divergence starting to show up on the daily. Any breakthrough here, we're going to have an exit as it ascends higher and retests on the bullish flip side. Whereas if we enter here for a short trade, we're going to get stuck. If it goes in this direction, we're going to get stuck here, and that's what we don't want. So that's the idea behind that particular premise, if that makes sense. And any thoughts on that, guys?
I would agree that zone is definitely the key level to watch now, because a breakout above it will be another breakout above the 200 moving average as well. And right now it's set up to go lower. So until it breaks higher, I would expect it to go lower. That's how I would kind of look at it.
Yeah.
And I agree with everything you said in the shorter term as well.
Yeah. So yeah, okay. So I've got plenty more later when we run out of steam.
It's the same idea what I was looking at. It's the same idea what I was looking at the euro, right? The euro broke down from that pattern, but when it was at near the first low, was not the time to look at shorting it. The time to short it, if you weren't already in it, was after the bounce back up into resistance, and then it turns back down.
Yeah, for sure. So what you got next, Bruce? Before we hear from Howard and see what he's got.
What's that?
What you got? What you got next to show us, Bruce?
Yeah, let me go to.
I was late to the party, so you guys get to go first.
Let's just go to let's go to gold, for example, for a second. Hold on a second.
Here it comes.
Jeez, look at that. That happened a little faster than I expected. So we have a breakout in a long-term breakout in gold to a new record high. So far, it's at 2,975, but it's still trading near the highs and heading right for this first target, which is the completion of this ABCD pattern, where there's price symmetry between the second rally and the first rally. So I would be watching to see how it is going to behave around that high, around that target. I'm sorry. And then let me just check out where I got this line from as well. Okay, so this, just going back for a second to the weekly. One of the things I use a good amount are channels, and that's more of a newer thing over the last few years. I've started to use channels more and more because they seem to add a little bit of information. So this channel was this channel line, these parallel channels right here, if we take this one up here, it's connecting here, 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 and here. It was drawn before, okay? And it just happens that it's about to converge. It's also providing another area of potential resistance as gold goes to new highs. So as I look at this 2077.7, I'm going to watch this area. There's a potential that momentum is going to be strong enough to break through it, and then these higher targets come into play if that happens. So in other words, if it continues to break, if it breaks out through 2009.78 and stays there, then the next target is 989 and then 3,000 roughly. And the 3,000 is just the 127% extension of this ABCD pattern, which is a Fibonacci ratio. And so this second rally, the CD rally, is 127.2% of this first rally, showing a harmonic relationship. So it's a, as we were talking about harmonic patterns yesterday, this is a smaller version of a harmonic pattern, you could say, a more simpler version. Now, so this is going to help if you're already in gold. At this point, it's too late to get in long until we create some type of setup, and that would occur on a pullback, preferably after touching or getting close to the next target of 2009.78, and then pulling back and setting up a bullish reversal on the pullback.
Yeah, that is quite a strong move to the upside for sure.
Now,
I think a sign of the
gold,
times.
What's that?
Sign of the times, I think. Get rid of cash, buy gold, put it under your bed.
I'm sorry, I didn't hear that. Can you repeat it?
It wasn't overly important, don't worry. So how would you what's the next potential trade you would suggest then, Bruce, for gold?
So if you were doing short-term trading, I'd be looking for a short on a pullback. But I wouldn't be doing that. I'd be looking for a pullback and then a bullish reversal setup for a continuation to the upside.
Yeah.
Yeah.
Now, when would that change? That would change. That might change if we have a strong bearish reversal pattern or behavior that happens after hitting that target. But generally, I probably wouldn't. If I was really looking for a trade, that's what I would look for. But ideally, I'm going to stay in the direction of the stronger trend, which would occur after a pullback and a subsequent setup.
What's the
pullback would you be looking for? I mean, obviously, you don't want to break the trend, but where would you be area-wise? Where would it, if you were looking for the ideal long setup, where would you be waiting for it to touch before you enter? Would it just be that top fib level, the 1.618, or would you wait for the for it to come back down a little bit further?
Would I wait for the 1618?
Yeah, I mean,
look at every level is an area of interest that I'm going to pay attention to and look at the pattern that develops in the price behavior. So those areas of interest, when I'm going to want to start looking at it to see if there's a potential bullish setup, right? And at this point, that's it looks like that's going to be around these highs because of 38.2% retracement, which what I would anticipate as a minimum retracement, is below there on this smaller swing. Now, I can go in closer and take the shorter swing as well. And so then I would look at it around 2009.60. So 2009.60, 2009.55, and there's some confluence there, which I'm going to pay attention to. There's also confluence here around 2009.4 or 9.50. And then we have the 20 moving average. And the 20 moving average, of course, is way down here. So it depends on what time frame I decide to do my setup on, but that's basically how I'm going to look at it.
Yeah,
and you can see
for me, I've never traded gold, but for me, if someone came up to me and said, "Look, I'm thinking of investing in gold for the first time," I'm spotting that the moving average and that essentially the diagonal trend line, which is supporting the primary trend. That's where I would be looking to come in. But it's difficult, right? Because that's quite a strong move. So a simple
I don't try to make that decision ahead of time. I'm just looking at the various levels where I might have interest and then determine at that point.
Yeah, I'm more of a what's the perfect entry, and then I go from there.
Yeah, so you could see from this angle here of ascent that we're overbought just based on that, how far it's gotten away from this trend line.
Yeah.
So you were saying that you'd buy at this trend line? Is that what you're saying?
I might. Well, I wouldn't. You're much more experienced in this, but I'm just the way I look at it.
There's multiple ways to deal with. There's no right.
I mean, as you said, when I see distance like that, because I'm looking at that, I'm looking more like the diagonal trend line, which is made up of your A, B, C, D pattern, which is the orange line essentially. There's kind of a base primary line there, and because it's quite a powerful move, I would be wanting it firstly for a pullback, especially as we're cooking on the RSI.
Talk about this line here?
No, I mean, if you just look at the CD line, the orange CD line. So the ascending diagonal orange line, which makes up your C to D move.
Paul, you could move your hands away from your mouth because I can't hear what you're saying.
I'm so sorry, Bruce.
Really well.
Just the orange diagonal trend line, which makes up the C to D move. That's kind of where I'd be looking at. Yeah, but lower, obviously. Yeah, I'd be looking for maybe
that's not a trend. That's not a trend line. That's just the pattern.
No, but it seems to line up with a diagonal trend line, which kind of is bouncing off that moving average. So I would wait for a bit more of a exactly. That's it. Yeah,
right.
Yeah.
Right. So here's what I would say about that. Ideally, I would too, but I don't know if I'm going to have that opportunity. So that's what I'm taking into consideration as well. So yeah, ideally, it's a buy off this trend line. I would disagree with that. That would be like saying yesterday, as we have all these, this is like the perfect setup, right? Everything is in alignment, and then everything is going to be a variation on that, where less and less is going to, less and less, let's say, conviction or evidence for something. That's going to be, so this would be the ideal, and then higher buys would be, less ideal, we could say, right?
Yeah, but like you said, it's such a strong move.
Given the bullish momentum, given the bullish momentum, the long-term trend, the breakout of a new base, we may not get that opportunity for it to go that low. So that's why I'm looking at it based on what I just said.
Yeah.
And why also it depends on how it behaves, right? So how does it approach this 38.2? If it does it in an hour, I'm not going to look to buy there probably. Because this is extended, and I would expect some type of, if it does stop here and pull back, it could pull back for a little bit, for a few days or more.
Yeah, and you've got two or three really good points to start scaling in as well. The first diagonal trend line, then you got the second one with a nice pocket. So you can enter slowly, depending on how it reacts. Absolutely, yeah, good chart.
Yeah. Got a little question.
So just to finish. So he brought up a good point. If I'm doing a full analysis on this at all levels and stuff, I'm going to say, okay, so this may be the ideal place I want to buy it. Let's say down, or let's say the 20 moving average. Okay, for example. Then I have to look at, well, what if that doesn't happen? What are my options in that case? Either I leave it alone, or I look to do something.
Yeah, good stuff.
I was going to say, the low of the day before, was it the day before yesterday, when it based out? Where was the RSI at that point? 40
the
something.
RSI where?
A bit forward. Not that low. The next line.
The RSI is overbought as well, then.
Yeah, I'm talking about when it based out. What, yesterday or the day before yesterday? That one. The low of the RSI when it based out a couple of days ago.
Yeah, it looks about 45,
mean,
doesn't
right
it?
here? I mean, the
Yeah, yeah.
breakout of the declining line? Yeah, so it was
Just a bit.
approaching overbought.
Yeah, that's what I'm saying. So in a bull market, you'll find the RSI bases out probably around 40, 45. And if you go back to the previous swing before the big correction, the RSI tended to base out just a little bit below 50. So that's something that if I'm using RSI or if I'm looking at it, I'd be wanting to, if you're looking for the pullback, it might be good to coincide for an RSI perhaps a little bit below 50 if you think it's still a bull market.
Yeah, because there's a good diagonal trend line on the RSI as well, which you could use to trade off for your entry, right? So if you drew a little line between the two dips from exactly the start of March, the pullback to that line would again give you additional confluence for an entry, ideally, right? So yeah, absolutely.
Could be something to time the entry, when it pulls back, if and when it pulls back.
Yeah. RSI, very helpful.
Now, if I was doing very short-term trading for Bitcoin, which sometimes I might do that, right now I'm not really doing that. I'm looking more for swings, and I might go to like the 30-minute and look for a bearish reversal signal on the 30-minute, particularly because it's recognizing the target so far. So this is about how does it behave. So it's not, I mean, it's recognizing the target perfectly. So that means I'm going to pay even extra attention to it, right? Ideally, I would also have some other confluence up here, identifying a similar level. In this case, of course, we don't. We might if I threw in some other measurements, but right now we don't. So I might look for that with an expectation to go down to these previous highs, for example, on a minimum. I'd have to look at it more carefully, but that would be something I might look at, or look for something where maybe it goes down to this trend line, for example.
Yeah.
And now I'm on a 30-minute chart.
Yeah.
So it really, sometimes I may trade it intraday and shorter time, based on shorter time frames. Sometimes I may trade it just on not on the daily, but the daily would support the trade setup.
Yeah, you're making me want to buy gold, Bruce.
What's that?
You're making me want to buy gold.
Well, I think you have to consider it given the pattern. I mean, the thing is, but here's the thing, it's been lagging, right? So it's been lagging what's been going on in the macro economy globally, right? You would have expected it to be, I would have expected it to be a little more aggressive. But sometimes these things take a little time. But once they kick in, gold has the potential to have still continue for a good amount of time. If we look at the long-term pattern, let me go to the weekly. We got to break out of a large cup and handle. Even if you don't look at that, we got to break out of a sideways base. We got to break out of a flag, a test of support at the 20 on the weekly test support all the way up, weekly on the 20. And now we're getting much further away from the 20. And that's something I would want to pay attention to as well, right? Because now that would support the idea that maybe we're getting a little overbought.
Yeah.
In the bigger picture.
I think before we pass over to Howard, Howard, do you mind if I just show just one picture? Because Bruce, you said about, you expected gold maybe to be a bit more, have a bit more power. And I think the argument might be that because Bitcoin is now starting to be considered also digital gold, that maybe, if I just show you this chart, maybe it explains perhaps why gold isn't getting as much love as it should. Tell me when you can see the chart.
So you think it's taking some capital away maybe from gold demand?
Well, based on, can you see this chart?
Mm-hmm.
Yep, got it. Yep.
Based on this chart, yes. So Bitcoin held by public companies, and obviously we're going to the moon. So that might answer that potential question. And again, it kind of shows what's going on underneath the surface, and how, even though we're talking about, is Bitcoin gonna, become the next digital gold? Is Bitcoin going to break down from its primary trend? But when you look at it, there's a lot of people buying and investing, and that's what people should be aware of. So buy gold, yes, great setup, but don't discount Bitcoin.
Well, I mean, you think, when I'm talking about gold, I'm talking about a trade.
Yeah.
Okay. A trade could be, and I'm talking about a trade that could be an investment trade up to 3 months, maybe, but I'm looking at it more like 1, 2, 3 weeks kind of thing.
Yeah. Yeah. Midterm.
But it's progressing in a classic bullish fashion. That I think I wouldn't be surprised if it all ends with a real spike.
Yeah.
At some point, because what is, in my how I look at it is it's largely a measure of confidence in government.
Yes.
Vote of
So
recommend,
I
but
don't
yes,
I don't think I need to say more about that.
No, we don't. Let's not get
There's some confusion in that area right now, and so it would make sense that we're getting now a rally in gold. And it's not just a rally. The breakout is a nice breakout. It's a strong, clear, decisive breakout that will very possibly close near the high of the day. And so it could easily just keep going and not pull back.
Yeah.
A little bit more, maybe some of these higher levels now. But silver kind of goes hand in hand with it as well. Silver is also getting clearly more bullish as well.
Bruce, you're the master of understatement when discussing what's going on in Washington at the moment. I applaud you for such self-control.
Well, I don't want to believe my own statements too much, so I try to stay sober. I have to be ready to change my mind at a moment's notice,
Yeah, my opinion yesterday is different than it is today, for sure. Howard, what you got for us?
Yeah, sure. Just one sec. Let's get the screen up there. Let's have a look. Hang on. Let's just move that there. Okay, and present. Okay, let me know when it comes through.
Not yet.
Not yet.
Oh, it looks like it's coming. Here we go.
Let's try that.
Thank you. Got it.
Okay, great. Yeah. Okay, actually, yeah. Yeah, you might see the top of my head now. So gold. Yeah, I guess just kicking it off with gold. Yeah, I mean, I've been looking for this move over the last sort of couple of days, and basically we had that kind of pattern a couple of days ago where we had a big down candle, and then it got reversed the next day after a little bit of a correction. Similar kind of things going back, for the in January and February. So it seems that gold, there is real demand on gold. Obviously, when it goes down, you have a down day, then they come in and they pick it up again. On the shorter term thing, because obviously everybody in the world is bullish at this point, I follow Elliott Wave quite a lot. A lot of my stuff comes from Elliott Wave, a lot of my longer term forecasts, sometimes some of my shorter term forecasts as well. So the reason for the last couple of days, Elliott wise, I've been bullish is because we had this ABC decline, and ABC moves go against the trend. So from an Elliott perspective, if you can identify completion of an ABC move, a 3-wave move, then that gives you a good, a good chance that the larger move, the trend is resuming, and that's essentially what we've seen. And today we're starting to see the acceleration.
Howard.
Yeah, go.
Howard, I can't see your chart. Are you sure? I don't see a chart. Paul, do you see a chart?
Oh, sorry.
See your table. Yeah.
Okay. Yeah. So I'm sorry. Yeah. Let's just let's try that again. Technology. Okay. Let's try that. Please let me know. Is it come through yet? Or
not yet?
Right. So if I close that other thing down, that might help. Right. How about that? Does it come through yet?
Not yet.
Do I stop presenting and then try again?
Yeah.
Okay, 1 second. So let's present, share like that. Okay. Okay, how does that look?
Got it. Thank you.
Oh, thank God for that. Okay. Yes. So what I was saying was I use Elliott Wave to give me kind of a directional bias. And going back a couple of days, what kind of got me bullish and buying the break up was completion of this ABC move down. So we've had this kind of ABC decline, and now we're starting to resume the move. I think what we're doing is actually we're probably getting close to the end of this third wave. So from here, 1, 2, and this is kind of wave 3, which should break down into 5 waves. Which arguably you probably could term this as a fifth wave that might be about to end. But again, you need to see the whole thing kind of top out, and then I think it's easier calling the end of an ABC than it is to call the end of an impulsive sequence. So gold, I'll be looking to buy the dips once we get another one of these ABC sequences, which could last maybe 1, 2, perhaps 3 days. So that would maybe time with what you guys were talking about with the RSI kind of coming back from mega overbought to somewhere a bit more neutral. So certainly looking to buy the pull. I wouldn't want to short this thing unless I see something really really obvious in terms of maybe a day or two where it struggles to go higher, kind of long upper shadows on the candlesticks, that kind of thing. So that's gold. What I wanted to, obviously you've got this kind of thing with the the stock market and the cryptos, I guess the risk on, risk off type thing, whereby we looked at, I think, Bitcoin earlier on, where basically you have this kind of well, this is the S&P, isn't it? So we're kind of trending down. We have maybe 1 or perhaps 2 days where it tries to go higher, and then in come the sellers. We've broken through yesterday's low on S&P. That looks like it's about to head on. Broken through that pivot level there on the 30-minute chart. So yeah, bearish for me. I think at this point, just chuck out the indicators, the oversold indicators, and just go with the move. How is Bitcoin? Has that gone yet? Not just yet. I think we're still waiting for that one. But yeah, it looks like it's heading on down to the level we were looking at earlier on. So that could be where a lot of the long, the bottom fishers, they've got their stops underneath this point.
Yeah.
So I think we break that, then suddenly everyone's talking about a double top, and then you're back down to revisit the lows. Or at least that's the risk anyway.
Yeah.
So a lot of these markets, they seem to be quite highly correlated, like the cryptos and the stock market. So they tend to be, the stock market's having a bad day, then Bitcoin and some of the others are having a bad day. I think we looked at Litecoin, didn't we? The last time we were on together, we looked at Litecoin, Paul. And I think we were looking at it, struggling and maybe breaking down. Actually, there's the daily there, isn't it? I think we looked at it here, and it looked like it was struggling and heading down. And there's a lot of talk about big support down here.
Yeah, I got a Litecoin setup we can look at later, but for sure, yeah.
Yeah, no, again, for me, it looks like another one of these things where you've seen an aggressive move down in the direction of the trend, and a couple of days trying to go higher, but today we're starting to break down again. So this could be perhaps the very early stages of the next leg down. And from a longer term perspective, obviously once we're down here, then we can think about some big demand coming in. But I think in the short term, it does look a little bit.
I do have a question for both of you, but I do have a quick
go for
question
it,
on this. So, and particularly probably Paul may have a better idea of this, is so we've got alts going down, we got Bitcoin going down, we got the S&P going down. Would it be your expectation they all start to bottom at the same time? And how do you think about that if you do?
Bitcoin and altcoins?
In regards to alts.
Well, can I Howard, can I swap and show a chart to answer that question? Is that all right?
Yep, dive in, of course. Yep, all yours.
So just do you want to, sorry, Bruce, can you just reiterate your question again, please?
Yeah, so how are you looking at the correlation between the pattern in Bitcoin and alts and the S&P and the dollar?
Right, yeah.
They're all going down strong. They're all going strong downtrends. Would you anticipate that they start to bottom and rally at the same time? I mean, it seems to be that would be possible and likely. What is your take on that, though?
Right. Well, the issue is
alts I'm talking about, and Bitcoin as well.
Yeah. So the issue is, I'm just trying to find the right chart to show you. It wasn't. So this is the issue. Okay. So this is the money flow. Now, this is the proportion. When it goes up, money is leaving the altcoin market, or rather, the Bitcoin market cap is increasing faster than the altcoin market, including Ethereum. So this is the previous two bull runs when we entered a downtrend. So when it's going down, we're having money flowing into the altcoins, right? We haven't had that yet. So Bitcoin has been having its run up, which is classic of the bull run, and that's all fine. But unlike previous cycles, we haven't had this breakdown yet. So there is right now, the Bitcoin and the rest of the market are not correlated at all at the moment, because everything's about Bitcoin, and the rest of the market, essentially being risk assets, are being hit terribly hard by the uncertainty. So this is when this changes to a downtrend, that is when the altcoins will bottom. That is the barometer, because unfortunately, a lot of altcoins are now beyond in negative price discovery. So they've gone below the bottom, and that's very concerning. So if Bitcoin doesn't bounce now or soon, we're going to, this will continue, and the altcoins won't move with Bitcoin regardless of whatever it does. So, and this is the shorter term chart for Bitcoin dominance, if I can find it. I really need to use lists. So where is it? Let's find it. Oh, I can't find it. It's disappeared. There we go. So this is Bitcoin dominance 4 hour. Now, altcoins should be getting a bit of relief from this move, because when this goes down, this is, altcoins are starting to make a bit of a recovery, but we're not really seeing anything yet, because this is still a pattern which with probabilities will break to the upside, which will again put more money in Bitcoin and take it out proportionally of the altcoin market. So regardless of what Bitcoin does, until we see Bitcoin dominance breaking down and entering on the longer term timeframes, even the medium term timeframes, a downtrend, Bitcoin will potentially carry on going upwards and breaking all-time highs eventually, hopefully, but the altcoin market will not follow unless we get this signal. And maybe Howard, do you want to answer the question about the other markets?
Yeah, I mean, at the end of the day, I guess it's one of these things where, as you say, it's a kind of risk-off situation. So it might be one of those things when when some good news comes through and the market's reversed, and they kind of reverse together. It could be one of those situations, because there is quite a high correlation between a lot of these markets. So I guess the theme that's driving the markets, when it reverses, they should probably reverse together, I'd imagine. But for me, I think it really just drilling down to the things individually on the charts and putting the blinkers on sometimes, but noting that there are correlations.
Yeah, I mean, the dollar it has a very strong correlation, obviously, because a cooler dollar is better for risk assets. And the problem we're seeing, even though the dollar has now given us some signals that it's going to enter a downtrend, we still haven't, the market isn't responding. And that's because of the uncertainty. And this is the problem with unprecedented actions in the economy, the world economy, because we're now faced with the altcoin market is now faced with a set of challenges which it hasn't seen before since the formation of Bitcoin back in 2008. So Bitcoin, as long as we carry on with the primary trend, right, the stock market goes up, we're going to have that correlation, and Bitcoin is going to get some relief as well, because it's digital gold, right? That's what we're looking for. But the rest of the market, it's not de-inflationary. It will only move when investors feel confident that they're going to enter a long-term uptrend, and that is determined by what Bitcoin dominances does. So that is what everybody should be looking at for long-term investments, and obviously keeping an eye on the dollar to see if that gives us any front-running signals that the altcoin market will recover. But the downwards pressure is because everything's been reset. All of the work which has been put in to some of the top cryptos over the last 18 months has been undone by all of this economic issues. They've all reset. Bitcoin's only holding its own because it's a different type of asset, and it leads the pack in that way. It follows a cycle. So I'm not worried about Bitcoin right now, but correlation is all over the place. And as you guys said, just try and focus on the basics and take it from there. When you see an inverse head and shoulders, go for it.
Yeah. Okay. Bruce, did you have any more markets you wanted to show, or
I was just going to I was just looking at the pound yen. Let's take a quick look at that. I'm sorry, the dollar yen. Well, the pound yen and the dollar yen, I think. I just got to double check that. Okay. So I wanted to talk about this situation in the dollar yen, which is this downtrend. Okay. And there's support at the 61.8% retracement, but this is showing signs of potential continuation. And it has a potential continuation candle pattern right here as a shooting star candlestick pattern. So now I'm going to go into let's go into the 2 hour and take a look at it closer up. So, and this is, I'm going to talk about in general, but also specifically to this as well. So, because it's going to be true of any downtrend or any uptrend on the opposite side. So when I go into the 2 hour, we've got a very clear downtrend of lower swing highs and lower swing lows. And we have the resistance trend at the 200 blue moving average, and tested here as resistance, tested here as resistance, and tested again here as resistance. And this is a subtle thing, but something interesting that's happening is the relationship to the 200 is getting weaker. So here it broke above it, here it hit it, and here it couldn't make it and turned down. That is another subtle piece of evidence that the bear trend is still intact. And so then the expectation would be for continuation of the bear trend. And then how do you get in? Well, one way you get in is off a bounce test of resistance up here, maybe on a lower time frame. It's too late for that, obviously, now. I mean, I was watching it last night. It wasn't really set up in a way that I like. And so now we look at it in the current situation. And then that means that a break below yesterday's low is potentially a continuation of this trend, or a bounce back up into the line to test resistance again, and then a turn back down may be a sign of a continuation of the trend. So those are a couple of ways I'd be looking at this. I'm also noticing that the 50 moving average on the 4 hour chart is seeing resistance, 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 resistance here. That's also bearish and the way I look at it, but not until we get a bearish signal, another bearish signal. Does that all make sense?
Totally makes sense to me. I'm in total agreement with you there.
Okay. And then the question is, how does it behave? Okay. So I have my stop either above these highs or above these highs, depending on how aggressive I might want to be on my stop. In this case, I would be more aggressive because I don't totally trust a breakdown of this 1 day candlestick pattern. Okay. The fact that it's contained within this larger bearish structure is critical, but also it's not the best signal in the world. And you could see we already had a breakdown, a false breakdown. So I'm going to want to keep an eye on this for, I can short it below today's low, but I'm not sure about that yet. Or another breakdown below yesterday's low. Those would be two options. About below this low right here, and that would also get below both moving averages as well.
Yeah, I'm definitely
sure. And so this could be the dollar yen. It could be anything. It doesn't matter what it is. The same thing. I'm going to look at it the same way.
Yeah.
Well, good. Yeah, it does look like a corrective bounce has finished, and we resume. And I think the yen it typically goes up. The yen crosses go down when there's a risk off situation. So let's assume that the stock markets and crypto do continue down. That would kind of tie in a little bit with the yen crosses breaking lower for me.
Now let's just take a quick look at a pound dollar versus euro dollar. Now, ideally, the pound dollar was also in a bearish setup. It would be in a bearish setup at the same time the euro dollar is, but it's not really. It's not as clear. It's still going higher. I don't see a bearish setup here. And it's showing strength because it broke out above this channel and broke out above the 200 as the euro is, although it doesn't have the channel, it did break out above the 200. So when I was looking at the euro dollar, was also looking at the pound dollar to see if it's behaving in a similar way, to give a little more confirmation potentially.
Yeah, I'm seeing a I agree. I think you just flipped back from a different time frame, and I just caught a glimpse of a potential resistance level from a diagonal trend line. I think I can't quite see it now, but no, I can't see it. Yeah, I can't. No, I'm not seeing it now. That's okay.
Maybe I was on. Maybe I think I went back to the euro dollar really quick. I think that's.
All right. Yeah, that was it. Oh, yeah, that's what confused me. That was it.
Sorry, I should have been more clear. I apologize. This is the okay. So let's go back into this real quick, and then so now the question is, okay, it's hitting resistance at the. I'm on the 1 hour now. So let's stay with the 4 hour because that's what I was talking about earlier. Let me go into the short. So here's the setup, right? We have a breakdown. Once we have a breakdown, we're going to swing back and test it as resistance. We may go to the area of previous support, or we may go below and find resistance lower. So now I'm going to go into the shorter time frame and see what I see there. And so I see something interesting, which is the 50 moving average has converged with the trend line here, and it's tested as resistance for the last 3 periods, and it's holding as resistance. My expectation is for a continuation to the downside, right? Now, somebody could disagree with that. That's fine. That's not really the important part because I have to see further evidence for that, right? And here you can see a little more clearly, maybe the acceleration of the decline here. And now going into a shorter time frame, I usually go 30 minutes is usually the shortest I'll go to in FX. And so now there's a reversal below this candle here at 1.0854. So I may add or a new short at that point based on everything I just said, but also importantly, it's very clear what the pattern I'm trading. And I could also look at this in a different way and trade a different pattern. But this is the pattern I'm trading. And importantly, the 20 moving average is giving me a very clear resistance level where I may want to get out and then look for a new entry. Because based on the 4 hour, it could still go a bit higher as well. Could test, up here, 1.0880 before it turns back down.
But there's a good few little pockets to potentially trade off there. So it's a really good setup.
Yeah, I mean, I like this. The setup as it's going right now looks really good. And I'm always prepared for it not to work. And so I have a lot of things telling me when it might not be working. Specifically, the lower swing high here is going to be a break of structure of this downtrend. And at that point, it will also be above this trend line, above the moving averages, and so forth.
Yeah, it's good compliments.
So how does it? I mean, I think it's important to remember how the for our listeners how trends progress, because hold on a second, I gotta get out my how trends progress. Shoot, I can't reach my adjustment while I've got my sharing button on the bottom. But let me see another way to do that. So how do trends progress is they come down, they hit support, they come up, they find resistance, they come down, they break resistance. Break support, find support, come up, test prior support as resistance. It could be here, could be here, could be here, before it turns back down. So that's what you're seeing in this progression here. And I think that's important because when I look at this, I say, okay, what is the market telling me based on what it's doing? And so what I always go back to is, where do I have my higher highs and higher lows? And lower highs and lower lows? What is the structure of the trend at different levels, at different scales, I should say?
Yeah.
And then the moving averages will help with that analysis.
Yeah, it's a good setup.
But the other thing that I just noticed is we have confirmation of the bearish potential by the 20 moving just crossed below. Well, now I'm on the 30 minute. So let me go back to the, yeah, what already happened on the hour. You have a crossover, the 20 cross below. I didn't see that yet. The 20 cross below the 50. And then it became resistance. So this is classic bearish progression of a bearish trend, a potential bearish trend, I should say. It's a bearish trend here, but it has a potential to keep going.
Yeah. Yeah. That's great.
And then just really quickly on the dollar is that we have the first one-day potential bullish reversal on the dollar at the 200% target for this decline. So we had the first decline here. The second decline was 200% of the first decline. And it stopped almost on the button.
Yeah.
But importantly, that by itself is not really enough. We also have this low over here, resistance, support, and so forth. This one is really clear. Okay. So since they both saw. Now, I'm not suggesting to buy it based on that. I'm just saying now maybe we want to watch it and then also watch some of the other dollar pairs based on what we're seeing in the dollar. So it's not a convincing reversal, and it's only a one-day bullish reversal. If I'm just going to trade for the one day, maybe I might do something with it.
Yeah, and I want it to come down for crypto. That's it. I want it to come down. Sorry, everybody. Sorry, dollar.
No, go ahead. Who wants? Somebody else could take it.
Yeah. How would you mind if I just whip through Litecoin trade, following on from what you were saying?
Yeah, go for
it.
Yeah, of course.
Right, because you were very right. It is a short trade for sure. And let me show you why. So, firstly, you're thinking this isn't Litecoin. This is Bitcoin dominance. But here we are. This is an ascending triangle, which we've discussed previously, and the probabilities are that it will break out until it breaks down. So we're now at support for Bitcoin dominance, which is essentially the equivalent of resistance for the altcoin market. So if we get a bounce here, that is going to put selling pressure on the altcoins, right? So this is the move, right? So we're in a great position for the money flow for a short trade, as long as we get a move upwards from here right now. So that's what we're waiting for. And this is something, the line in the sand, you can look at for your short entry we're about to talk about. So the money flow is in a good place for Litecoin, and this would be the trade. So obviously, as Howard said, we are in a very strong downtrend, and even the issue is, of course, if we zoomed out, you'd see we're in the support zone. We're in the kind of the long-term buy zone. So we're only trying to capitalize off one single move, because if the market starts to reverse, the dollar breaks down, or Bitcoin starts becoming a bit more bullish, then we'll see buyers trying to come in here. So it's just going to be a single move, a single trade, not any of the medium-term stuff, which I sometimes talk about. So this is obviously a symmetrical triangle. It's 50-50 either way, but you can see the bias. We've got more sellers above and more moving averages above, and we're also below the point of control. So the trade for this would very simply be, you would wait for a breakdown of this pattern, and I'll zoom in a bit closer to see it. You'll wait for a candle body close, which we might be getting in about 10 minutes time. I might wait for the hourly candle body close just to be sure, but I'm just trying to trade off the 30-minute right now. So this would be the move. You wait for confirmation, maybe of a candle body close on the 1 hour, and then ideally perhaps just wait for a move upwards, which will maybe just give us a little bit more oversold conditions on the stock potentially. And maybe this is the area which you want to come into, you know, this test, and that will line up with the point of control, which will give you some selling action, and then just trying to ride it down. You'd short around here, and then you'd maybe scale in at this line, and then come in with your 50% here, 50% here, and then ride it down into this order block. And because it is a long-term buy zone, not the bottom of the order block, just here, and it could be potentially a quick 4% over the next few days if bearish conditions apply. And obviously these things are great to manage because you have a definable line in the sand where, and we've got this confluence of trend lines as well. So if we do get a break up, we do get a break into the pattern, you know, we have options in order to get out, which is why this top entry might be pretty good for risk management. But this is a potential short trade for Litecoin. Any words of wisdom from you guys on that? Really straightforward trade.
Totally agree.
Yeah, I mean, I would agree
Be more
on that
critical.
as well. I would
It must
agree.
be going. It must be going up then.
Well, we got a you know, that's a bear pennant, so it's a breakdown of a bear pennant, and and then, you know, I said the one thing I would want to see is some follow through right away, preferably.
Yeah. Yeah. I mean, the only thing giving me pause is kind of, you know, the RSIs are all over the place, but, you know, it's quite a good trade. You got a lot of confluence, you know, that's the one to take, but be very cautious because there's going to be buyers coming in here. So, you know, be very, try and get out quite quickly, but with a bit of leverage on that, pretty decent setup. And again, this is the key with crypto trading. It's not just about this. I'm only promoting this as a trade simply because the money flow is also working in our favor, and that's what will give you an edge. But that's it. That's it essentially, I think, for my trade. Anything else to comment on that before I close it down?
Yeah, if I could just very quickly just do those yen crosses.
Yeah.
1 second, just to.
Thanks for letting me do that.
No worries. All right, let's try this. Okay, let me know when it comes through, please.
Got it. Thank you.
Cool. Okay. So just quickly, euro yen and sterling yen. Euro yen basically made a major high last summer. Big swing down. I think it's an A leg of a kind of corrective pattern. And the thing that gives that away is a very sharp impulsive move to the downside. And that was followed by a 3-legged B wave correction of it. And since then, we've just been going sideways. I've put these red arrows on top here just to show you that we've got people that are trapped above the high of the this little rebound. So all these people that bought the break of this purple line, they're trapped, and we're struggling this week so far. Maybe we've seen the high, maybe not. It's just something that I'm watching, looking for a kind of an attempt at having a crack at the short side. Onto the daily, I guess you see that a little bit better. There's the A, there's the B, there's the C. First leg down, retest, and it struggles. All these people here that bought the break of that A leg high, they're trapped, and that's, I think, why these rallies are stalling in that region. We've had a nice little recovery from the support last few sessions, but again, we're struggling at resistance here. We had a breakout a couple of days ago, and yesterday we had a bit of an attempt at pushing higher, continuing, but here we are today, starting to break down. So this could be early stages of a kind of that lower top I was looking at on the larger time frame, and that we start to head down again. And that, I think, is really where we are on euro yen. Maybe we're seeing it already today. We've got a bit of a break of a support on the very short term chart here. So this could be the early stages of the breakdown. Sterling yen is very similar. I call them the ugly sisters. We had a similar kind of thing where we had a breakdown from the major peak, an impulsive breakdown, then an ABC rally up to correct it, and then we're chopping like a bit of an M formation, and a very weak attempt at buying at the support level here. There's not a whole lot going on in terms of upside action on a weekly chart. This is the weekly chart. Onto the daily, as we're kind of a bit short of time. Again, similar to Euro Yen, where we've had this kind of push higher last couple of days, and it's struggling at the top of this range. And today we're starting to break down. So maybe, just maybe, this is the another lower high within this kind of bearish topping sequence, and looking for the thing to start to head a little bit lower. Again, a similar kind of thing where we've seen an A, B, and a C rally, and then we've got people trapped above the A leg high. So it looks to. Sorry,
I don't want to cut you. Can you pull up the monthly for a second on the pound yen?
Which one? The monthly?
Yeah, you have the monthly there.
Yes. Here we go. That's weekly,
Yes,
so
you
I'll
have
just
it.
change that.
Okay. Yeah.
Sure.
So I was
Yeah,
just looking
exactly.
at that and seeing the low volatility a little better, for me on the larger time frame. And I think, I think there was a minor attempt to go above last month's high, but so far it's failed. But we have a higher monthly low, but we technically have a higher monthly low and higher monthly high. So I'd be watching that as well a little bit in the bigger picture.
Yeah, no, that's totally valid. I think if we start to really sort of head up through these revisit these levels, then that would really invalidate the bearish view for me. But I think purely because we've seen this kind of starting to sort of gravitate lower. So I think it's one of these ones. Watch this space next week or so. Check out the weeklies, and I think if this one starts to break down, this would kind of tie in a little bit with some of the risk off stuff with dollar yen breaking down. We looked at, I think you looked at dollar yen a bit before, that one being a bull hammer or a bearish kind of on the candlestick there. So yeah, it looks like yesterday's high was the corrective high for me, and that today we're starting to break down. And it's not really a dollar move, as you say, because the dollar is not really headed down against the European currencies. So it seems to be a yen move tied in with the stock market and tied in with the cryptos.
Yeah.
So I think this level could be important if and when this goes, because that would kind of be continuation. I think kind of first leg down, correction up, and here we are, breaking down in the next leg down. So that would be a good sell the break, I think.
Yeah.
And I guess that's pretty much it from my side. The only thing I was going to say was on the euro dollar cable, the dollar against the Europeans, they've gone a little bit too far, too fast. I think the major trend on euro dollar is up, based on the fact that we completed a major low back in 2022. We've seen the first leg up, and then this ABC decline, a corrective decline, and this looks to be the early stages of a third wave, which takes you up here. But in the short term, obviously, we've gone, we've gone really, kind of big time on the breakout. So we're just doing a lot of chop, and so no strong ideas over the very short term, I think, on this one. But longer term, looking for another opportunity to to buy this for the next big move higher.
Yeah, that's great.
So that's
all
I got to say.
So I was just going to follow
Yeah,
say, if you look at the first rally before the long-term consolidation in the euro dollar, and like you said, that would give us that target that you have as well, right? So we have, if take the first measured move, add it on to the recent low, there's a potential for a similar move eventually over the longer time period from the recent low.
Yeah, totally. And
so the C to one leg, add the distance in the C to one leg onto the recent low, and I think we have the potential to go to that and therefore break through that consolidation zone eventually.
Yeah, that would make a lot of sense. Even if I'm wrong about the major outlook where we break up here, I think you're right. I think we see something like this, and maybe it kind of struggles once we get into this region 120.
Yeah, good session. Sorry I was late.
No worries.
Yeah, thank you guys.
Great session.
I learned something.
Me too, as always, with you guys.
Oh, absolutely. Every time.
All right. Well, hopefully see you later in the week. Take care for now.
All the best, guys.
Thank you, guys.
Take
care,
care.
Paul. Take care, Howard.
Cheers. Bye-bye.
Hey, Michael. Michael, how you doing, man?
I'm great. How are you?
I'm great, thanks. How's things in Mexico? Did you have a couple of tacos for lunch?
No, I had some for dinner.
What time is it there?
So we don't recognize daylight saving time, so we're actually central. So it is right at 12 o'clock here.
Oh, okay. Sorry, I'm just going to share my screen. Yeah. Can you see my screen?
Not yet.
No.
Let's see if it comes up here.
Yeah, it takes a while, right? Like usually, I don't know. There's something. Sometimes it's quick. Other times it takes a lot longer. I don't know.
Yeah, for some reason it does that.
Yeah. Did you place any trades today? Did you trade today or not?
No, I was looking at EA I was looking at, but it didn't fully set up for me.
Okay.
So
yeah, I didn't manage to look at the markets today. I had to go and do a few things. So, hey, Igor, are you in the? Where are you? Is he gonna join? Ah, there the screen is. Finally, dude, that took a while.
Hello, everyone. Do you hear me?
Hey,
yes,
Igor.
hey, Igor.
Hello, Jannie. Hello, Michael.
Nice to see you, man.
Nice to see you again, Igor.
Yeah. So what was I going to say? Oh, yeah, the screen. As I said, I didn't get to trade today, but if I just look at the charts, I first want to start off with a daily time frame. So let me just open up the daily time frame. So this is, I mean, I start off with this in every session really, and that is just to point out the fact that we did break the 200 EMA, which is a significant support level on the daily time frame. And I did mark this next support level, which is, it's miles away from where we are right now. We had this little pullback, and today we're having this down day. But over the last 3 days, if you look at the smaller time frames, it was very rangy. Even today, it was very much a ranging day. It wasn't like a clean break. And I have to say, like in real time, if I saw this breakout combined with a breakout on the half an hour, as well as a breakout on the 1 hour, I definitely would have gone short. Definitely. But that clearly would not have worked out for me, which is not a problem. I mean, it's just, you're not going to win all your trades. In fact, in my case, I think I've mentioned already, my success rate varies between 50 and 60%. So, losing trades is nothing unusual for me.
Same here, to be totally honest.
Yeah, it's like, but that's also why, like, I avoid the, the 1-to-1 risk reward ratio trades. I mean, I know it can be very tempting to take them, but yeah, over the course of 100 trades, especially if you go through a bit of a tough period and the markets are they're not really clean charts, if that makes any sense. It's very choppy. If you go through a period of that, then and you go for 1-to-1s, I mean, you might as well stay in bed, You might as well stay in bed. Like, honestly, like far less stressful. By the way, I'm going to take this trade. I just wanted to, okay, with the stop loss above there and with a take profit at S2. But I'm not going to take a big position because I don't really trade this time of the day, as I've mentioned yesterday, but I'm going to take this one because it's lining up. So just look at on the 1 hour time frame, we broke the support level there.
Yes.
It is bearish. And on the half an hour, we also have the last closed candle. Remember, I always look at the last closed candle. This is the last closed candle. That's also bearish. It rejected off that support level that it broke, right? And then on the 15-minute, we also have that bearish candle. Okay, but there's very low volume. We'll see if if it breaks this candle's high here, that highest point there, then then that would be a losing trade, which is fine, just fine. But that's the setup. So, Igor, anything on your side, mate? Have you managed to get any opportunities today? I know you focus on longer time frames, so I'm not really sure.
Yes, I can just share a few things.
Okay.
Let me present my screen just to show a few things from the yesterday, actually. Okay, so I just wanted to tell a couple people yesterday just were on a session number 1, and I talk about my trade. Actually, I create trade yesterday. So what's happened? Yesterday we have a CPA report. CPA report was bad for US dollar. What's happened? We almost hit 1.2980 on a CFD market. On the futures market, British pound dollar hit 1.3 level. It was a huge spike, and after the news, everything started to go down. And what I did in that moment, because I have statistics for a CPA for last 20 years, and every single time when we have when they have a worse than expected results for US dollar, that day we are we are bullish. So what's happened that moment, because of that statistics major and because of fundamentals, I entered one trade during the session 1. The level was 1.2942. My target was 1.3, and stop loss was 1.291. And I waited several hours. The price started to climb after a couple hours after that session. And on the end of the day, I said to audience in that moment that I will close my trade on the end of the day, whatever happens. So I will not leave that trade. And I didn't hit, of course, the target. I closed in the end around 1.2960. It was at least, I think, 18, 20 pips, something like that. Nothing special. So, of course, it was the smart decision because we started to go down during the day. And again, we have a bad PPA report today for US dollar. And instead of some push higher, we started to consolidate. And right now we are in nowhere man's land. So what I'm looking for currently for the British pound dollar and the euro dollar, because the very similar charts right now. This trend line on 30 minutes time frame is slightly bearish. I cannot make buy orders. I don't see that there is some push higher. We are some consolidating. We are neither in bullish, neither in some bearish move. We are somewhere nowhere right now. So my bullish bearish validation point is still around 1.291. So I want to see that price close below this level to say that we started some bearish cycle that can lead to the some meaningful levels like 1.2705 or something like that. So this is my opinion about British pound dollar, and this is about dollar. And for euro dollar, just to give some notice right now is that today we have this. I think that this level 1.088 is a pivot point. I think that we just touched a pivot point during the euro session, and the whole day we're below the pivot point, and we can see that's a clear bearish move for the euro dollar on the intraday level. We can see very clear bearish move. So the same story is for euro dollar. The same story is for British pound dollar.
Yeah, look, I mean that's that
trend here. It's not buying, it's not a sell. Yes.
Sorry, Igor. Yeah, that like I mean you're showing that bearish trend
please.
there, and then it made a very sharp pivot, like in that like almost like that range area. You see, like it's almost like the range area forming like a support level, support area. Does that make sense? Like where you've got that horizontal line
Yes,
drawn.
I would just. Yes, I will show you a different chart, a little bit better that I have on my algorithmic side of trading. I will just show just a moment, just to show. I think it's better to spot that. This is the okay. I will just okay, just to pick that. Here it is. Okay. Do you see the screen right now?
No, not yet.
I will wait. And now?
Are you the screen? Oh, no. Something's loading. Oh, there we go. Yeah, now I can see it. Yeah.
Yes. So, as you can see, this blue rectangle right now, the middle of that blue rectangle is pivot point. As you can see, price just a whole day almost is below the pivot point area. Just touch the pivot point in the early morning during Asia session, and whole day we're below the pivot point. Whole day. So this is the really in some bearish mode. I have some classification models on the left side, and every single model here predict a selling bias here and the bearish bias. So because of that, of course, I don't plan to make any buy order. Even we are really, I can say, overbought in the bullish phase and everything. But as we can see, last 2 days we have 2 bearish candles on a daily chart, and on the 30-minute chart, like I said, we are really on the bearish side, and it's not smart to enter into trade.
Sorry,
right
Igor.
Yes.
Sorry, can I just quickly stop you? I just want to, because I'm in a live trade, I just want to quickly show that. Is that okay?
Okay. Please. I will just
stop your.
Please.
Okay.
I
just want to show like what a close call this was. This was like ridiculously close, and I've got my the platform where I hope it's not gonna. Can you see the screen?
Yes.
So this is where I'm running the trade. Can you see how close it got to my stop loss?
Wow.
I mean, that was like, I was like, it's not going to work, because you can see it spiked up there. I'm like, oh, damn. So, like when you identify the high, I always give it a little bit of clearance. In this case, I feel like it was a little bit too short, too close, but but also based on the risk reward, like S2 is where I want to take profit, because that's also, you've mentioned pivot points. Now, pivot points is a very standard indicator that you can get. So you get your pivot, then you get S1, S2, S3, and the same with the opposite. You get R1, R2, and R3. So those are really good levels that can help you to either identify an opportunity to enter or look for some sort of a turning point. Or if you are already in a position, then those points or those areas can be used for to exit your position. So in this case, I'll obviously be looking to exit on S2. But yeah, like it's still got a while to go. Sorry, I just wanted to show you, first of all, how close that was. That was very, very close. I wouldn't have been bothered, to be honest, if it just stopped me out. I probably would have taken a second entry, because it's clearly just another hitting the resistance and coming back down. The opportunity is clearly, again, based on the longer time frames. I mean, I say the same thing because it's the same strategy, but the setups may look different every single time. So it's good to go through a lot of examples. And that's why I try to record trades every day. I did the last 2 days. Today, unfortunately, nothing. But fortunately, we got something right now. But it doesn't mean it's going to work. It could still fail. But at least you can see. At least you can see, exactly what I'm looking at, and the thinking process and so on. Okay, so we got now on the 1 minute time frame. We got another break of support here. So this support level, this indicator is a dynamic support and resistance indicator. It's just an indicator. It will just automatically identify the previous support resistance levels. It just makes it easier, so you don't have to manually kind of, okay, where's the support level, and then look at it and then draw lines. it just does it for you, and it's very convenient. I prefer to do it this way, and you get a little arrow as well, and that arrow just confirms that it did indeed close below the support level. That's very useful, especially when you when it's like really close. When it's very close to the line, it's like, well, did it close below or did it not close below? And then you kind of have to look at the actual price. Yeah, then you have to look at the actual price action. But if there's a little arrow just pointing and say, yeah, it definitely did break, then you know, okay, it did close below support. But now we're going to retest it. And that can also, I mean, anything can happen from this point, but yeah, I don't want to, I mean, I'll keep it open and just see if it's going to go to the S2 level. But does it make sense, the trade? Does the trade make sense?
Yes. Yes.
Yeah.
Jannie, can you just, again, to explain your process executing that trade, all triggers that you saw for that trade?
Sure. Like where's my coin? Let me just get a coin that I used to toss. No, it's like I look at obviously at multiple time frames. Okay, so I'll talk you through it now. I just want to keep a bit of an eye on this one, if you don't mind. I just want this trade to play out. But basically, what I do is I look at. You can see maybe you can't now because the MT4 is in the way. But I've got the 15-minute, the half an hour, and the 1 hour, and I look for confluence, and obviously the 1 minute time frame. The 1 minute time frame is I call it the trigger time frame because that's the time frame where I make the final decision. That's the time frame where I actually pull the trigger on. Okay, so I need to see a setup on that 1 minute time frame. But I get my bias from the longer time frames. So the 15-minute, half an hour, and the 1 hour, I need to get a bias. So I look for support resistance. I look for a general trend. Right, I'll explain it now. Let's just see how this trade works out. But so far, as you can see, like the support that it broke, it's kind of moving nicely. But it's just very slow, man. Not a lot of momentum here. Not a lot of volume here. But you can see on the 1 hour, that you can at least see on this chart so far. You can see that you broke out of the support twice. Now, this is the candle. What time was that? Okay, this was about half an hour after the open. That's when this candle started. So you got a breakout here. That's what I said to you earlier. Oh, that looks a bit better. Okay, we're getting close now. I say close. It's actually got a lot to go. 185. So we at 210 now. So 185. Still a while to go. What did I say now? Oh yeah. So on the 1 hour, you broke out of the support level, and on the half an hour, you also broke out of support, and the 15-minute was also bearish, and the general trend based on what I showed you on the daily is also bearish. So like it was just lining all up. But if I took that trade, I didn't take that trade, but just by looking at the charts, I know how I trade, and I just could see that that's definitely a trade I would have lost. But that's fine. But now for this particular trade is exactly the same process, exactly the same approach, exactly the same reasoning as the trade that didn't work. I just want to push a little bit lower than that. I'll show you now, Igor. Sorry about that, man. I just want to let this trade play out. This is it's getting close. If I get a bullish, I just don't like those small candles.
Yeah.
Like
I call them baby pips.
Yeah. Baby pips. Yeah, that's exactly what it is. So let's see. Oh, that's nice. Okay, I'm out.
There we go. There you go. They must have heard us.
Okay. Why am I? Okay, am I out? Okay. All right. Well, that was a nice little trade. So let me just quickly explain to you, or just answer your questions, Igor. If you so again, if you look at the time frames here, the 15-minute, the half an hour, and the 1 hour.
Okay.
I look for confluence. So I'm trying to see like what's going on, but I start with a daily. I start with a daily time frame. So let me just quickly start here. What do I see here? Like as I've mentioned at the beginning of the call, I think you were not in maybe. But this is the 200 EMA, So in the 200 EMA, that is a very significant support level, and that was broken a couple of days. Well, what's this now? 2, 3, 4, 5, 6 days ago, 6 trading days ago, which is when it broke a very significant support level, and that's significant. Okay, and usually around this area, it doesn't necessarily just keep breaking down. It can kind of hover around that area, and then there's a lot of indecision around that area. But in this case, there was none. It just broke down. So now I'm expecting this to go lower, right to at least this pivot point here. Okay, because that would serve as a support level. So that's where I start on the daily. Now the daily time frame is not always obvious. It's not always obvious what you can expect, to happen, because it can be, say, something like in this area here. It's very difficult to determine, okay, because you're in a very this is indecision. But what if I can get a clear bias, then I'm short, then ideally I want to see the same setups on the smaller time frames. Ideally. That does not mean I will get a setup in the opposite direction, by the way. There are some really good setups that you may find in completely the opposite direction. But what I'm saying is, ideally, to really increase the probability as much as you possibly can, if everything agrees, then it increases the probability for the trade to work in your favor. Look how beautiful it bounced off the S2. Yes. Right? So the S2 is like the pivot points, that's why I use it, because it's a respected level. But anyway, so if I can get clarity on the daily time frame, then I move on to the smaller time frames. And again, I use the 15-minute, the half an hour, and the 1 hour, and then the 1 minute is my trigger time frame. Now, I always say many people will not feel comfortable with a 1 minute time frame. That's fine. Trade the 5 minute, trade the 15 minute, and then you can, instead of making this the 15 minute, make that the half an hour, the 1 hour, and that the 4 hour or the daily. Yes. Just take the time frames out a bit, if that makes you make you feel a bit more comfortable. But it's exactly the same principles, exactly the same concept. It's exactly the same approach. So what I do here is I want 2 of the 3 time frames to at least give me a bearish signal. So in this case, we had a break below the support level. We had another bearish candle on the 1 hour. So I always look at the last closed candle. That was a bearish candle. This candle on the half an hour was also a bearish candle. Right? Just look at the little details here. There's not a lot to look for, to be honest. It's below the support level. It broke the support level on 2 occasions. The last closed candle is a bearish candle. You can see it pushed right back up and tested that support level and then came back down. And the 15-minute, we have this bearish candle that engulfed that bullish candle. So you've got 3 bearish candles on all 3 different time frames. So that's the first thing. The second thing to add to stack your probabilities is on 2 of these time frames, actually you could argue 3 of them, it broke the support levels on 3 different time frames. The third thing to stack your probabilities is that this candle came back to retest the support level where it broke out from, and you could argue it came pretty close here on the 15-minute as well. Now, this did not go back to the support level it broke out of, but it did come back to the previous day's low. That's this line here. That's the previous day's low. Do you see what I mean? Yeah. It's just a few basic, it's just stacking probabilities. So that's the third thing, and that's enough. Now, once I have that, my bias is short. My bias is short, and now this is my trigger time frame. And on the trigger, isn't Tigger like from Winnie the Pooh? the trigger time frame. The trigger time frame is the time frame where you make your decision, like your final, now I'm going to enter. Now I'm entering the trade. It looks good to enter. Or and also your stop loss and also your profit targets. Okay? But whatever you see on the 1 minute, for example, I took this trade when it broke out of this, this was the second one because it broke out here. Michael, we spoke about this yesterday. And yesterday's trade, it was very similar. It broke out. I was waiting for a pullback, but it never pulled back. It just went straight down. Mm-hmm. So that didn't present me with an opportunity, and I couldn't take the trade because my stop loss would be above the latest pivot, which will be right up here or maybe even up there. and my take profit will be at S2, and so that means my risk reward ratio is completely skewed.
Yes.
It's like that would be like far less than a 1-to-1. So that's why I didn't take that trade. Now this is now you get a pullback, and then it broke out, and I think I took the trade over here, I can't remember, one of these two breakouts, and then my stop loss is at the latest little pivot, and that's obviously the highest point of this bullish candle there. And I just showed you like when I was in the trade how very close it came to my stop loss. Okay, so don't put it right at the highest. Don't put it right at the top. Give it a little bit of clearance so that it can come back there and retest the previous high. Right.
Yeah.
So
I always say like a pip or two, plus the spread, 2-3 pips.
Yeah,
that's usually good enough.
Exactly. So that's the reason, but the point is once you have clarity on your bias that comes from longer time frames, it's like a top-down approach. Once you have clarity on your bias, and then you make a decision on the 1 minute time frame, but it's independent from the other time frames. Does that make sense? So it's like you look for a setup. You look now for a trading opportunity that's like just on that one time frame, and in this case it was a breakout of a breakout of the support level, and then a retest, and then breaking out again, and then your stop loss just at the highest point before off the retest. That's your stop loss, and then a target that makes sense. So it's anything bigger than a 1-to-1. If it's a 1-to-1.5, great. But if it's 1-to-1, I'm not interested. If it's less than 1-to-1, I'm definitely not interested. Definitely not, because of my success rate, right?
Yes.
If I with a success rate of 50 to 60%, and you're going to take these little trades, for example, if it breaks out here and you want to take profit, then your stop loss is right up there, and half of them work, half of them don't work, you're going to lose money.
Yes.
Guaranteed. So the risk reward ratio needs to make sense before you take the trade. But yeah, so does that make sense, Igor? Does the whole?
Yes, of course.
Yeah.
Excellent.
So yeah, but you can see I look at all 4 time frames at the same time, because it's just easier compared to clicking on this time frame and then go over to that time frame and then that one. That's very difficult to do. Or to stay, this is just you can just see everything happening at one go. It's just the daily time frame you can't see on there, but you only need to look at the daily time frame just once. You can you look at it at the beginning of your trading session. You look at the daily. You can spend 10-15 minutes on it, draw lines, do whatever you want, and get some rough idea of what's going on. But then you go to the smaller time frames, and then you make your trading decisions there, right? So, is there any questions on that, Igor, or was that did that answer your question?
Yes.
No problem. All right, Michael. Sorry, mate. Over to you, man.
I think Igor, you were still showing us something, or
no? You can start now.
Oh, okay, no problem. So sweet. So I was looking at 2 things today. Oh, what's happening here? Okay, I'll just still try to share it. Looks like someone's trying to share something. Okay, so I was looking at 2 pairs today. Let me know if you guys can see my screen.
Yes, I can.
Okay, perfect. So GA was what I was looking. Oh, I'm sorry, it was EA. EA is what I was looking for mainly. And this thing decided to start going the other way, right? Which always sucks, right? So I was looking for, as I always like to, let me close these. As I always like to bring up these 2 little points here, which would be that pattern. Oh, let me take this off. Right. So cool. So as I always like to go through, I'm looking for that second area of retest, right? So that would be, we got that break. So I'm looking for something in here just to kind of stretch this thing on out, right? So I want them to in essence, dip in that area and then just pull away, right? And just close below, and I'll take this to the 200 EMA, right? So same pattern.
Oh, okay. So yeah, you're in the first leg now, right? So it's the breakout, and you are at the retest phase now, right?
Exactly.
Yeah.
So I wanted to break through that little area and let me ride it. I want to ride it to the 200 EMA. That's my that's my whole premise, right?
Okay.
Is to be able to, because you see, as I like to point out, which I always like to start these sessions out with this, so you guys can really understand what exactly I'm looking at or looking for, right? And as I always say, I'm looking for that entry and this entry here, right? Oh, the candle's huge. The euro's huge. Okay, so I'm looking at these two areas here, right? And as you can kind of see, this is pretty ugly. This is an ugly peak, but it's still there. It does still count, right? And then I have my 1350 cross on my EMAs, which is this, right? This little area here. So the only thing I'm looking for, as you guys can see, I got this funny M-looking funny pattern pull back. I love how it missed the 200. If you got Howard was here, but Jannie, we went through it the other day. How I don't like it when yesterday rather, when it touches the 200, I wanted to miss it. Kind of how this one missed it, because I want to take price towards the 200 for the first time, not the second time.
Yes.
Right.
Yeah. No, you're right. There's that opportunity cost thing. I think
Exactly. So I wanted once this 1350 cross, what I'm looking for is next is the very first pullback to the 50 EMA, which is the blue one. And I'm looking for some type of pattern here now to go ahead and go short. And I'm all over this trade, right? This is actually my highest probability setup. This is my A+ setup.
I just want to point out something, if you don't mind, like that first block you've got there, right on the left, where it broke out of. If you look at this, is also a very common pattern. I just haven't named it yet. I need to give it a name. Maybe there is a name for it. I don't know. But that block, if you look at that price action there, you see that sharp rally to the upside. And I'm pretty sure we've looked at a very similar chart, or not a very similar chart, a similar pattern on, I think it was the dollar index. You get that really sharp rally to the upside, and then you get that drop, that pullback, and then it just ranges to the side.
Yeah.
Right? It just ranges to, but you get that obvious peak and then the range to the side, and that is always bearish. That's always bearish. So yeah, I just wanted to point that out.
Yeah, because for me, right, they have a lot of traders. Like, this is trap volume up here. This is how I see this, obviously. This whole area here for me is trap volume, right? They don't want to let these guys out. There's a lot of orders here. So this whole area above this is blocked off. So I just want them to dip into this area of interest and just pull away from it. And again, I want to be with them as they ride towards the 200 EMA. This is my main move, right? Because as you can see over here, as I always say, this is the level 1, right? And then I got, so level 1. And then I got level 2 coming here. These are the only 2 trades I'm actually actively taking. Right, level 2. All right, perfect. Right, so these 2 arrows, as you can see, obviously the second one hasn't come up yet, but that first arrow is definitely right here. Right, this is level 1. This is the same thing that I'm looking for. So when it comes back, retests this area, just how it retests it here, I'm looking to take this short right here. Right. Now, obviously, it won't always look like a point. Sometimes this will look like a M structure, kind of how it's doing now, right?
Yeah.
But this is the main thing I was looking at today. And in fact, seeing that this is we won't be on, but seeing that this is a Euro AUD pair, I wouldn't be surprised if this set up in Asia, right?
Yeah, so those are the worst ones. Like that's very typical with you call it EA. I just call it Euro Aussie. EA reminds me of like bots. I don't say EA. I just say when you said EA, I'm like, what are you talking about? It's like, oh, Euro Aussie. But the Euro Aussie is a like a very aggressive pair, right? It can also when it moves, it moves.
Yes, but there is one trick just to add. I watched this trade for myself too on the different way, because the Australian dollar fundamentally is much stronger than euro right now if we compare economies. And we started with a very weak euro today, and your setup is great. But about volatility, in that asset, euro Australian dollar is always the main. The small movements in Australian dollar can move euro Aussie a lot. So it's very important to watch Aussie during that trade. And I think that you are in a good position, because I think that Australian dollar will go higher. So I think that this your trade can be can reach the target. Yes.
For sure.
Yeah. Okay. So, but do you look like for opportunities on are there specific forex pairs you focus on, or is it mainly the euro dollar and the pound US dollar?
No, I look at a lot of them actually. Oh, I'm sorry.
Sorry, that was I should have said who the question was directed to. Both of you go at the same time. Make it interesting. No, sorry, Igor. You can. I was actually asking because you were we were talking about the Euro Aussie. But in terms of the pairs that you typically focus on, do you have like any specific ones, or do you kind of just scan through all of them?
So I have a decent amount of them actually. So I'm looking at EU, EJ, and I always, like when I say the name, I do them, it's like a shorter way. So like the first letter of each pair. So EU, EJ, EC, EN, EG, EA, then GBP, well, GU, GJ, GA, GC.
Oh my God. No, you can't talk like that. I'll never keep up with you. Like GA, GZU, GZ, GA. Like, what are you talking about? Okay.
So it's just the first letter of each.
Practical American, yes.
Yeah. Well, he's actually in Mexico. You know, he's on the run. I'm not sure if I'm supposed to share that, but Michael is actually.
You're hilarious. You're hilarious.
No, I'm just.
Well, yeah, so I do look at a decent amount of them actually. But like I mentioned yesterday, I'm just looking for one of my 5 setups to really show up on the chart, and that's really what I'm looking for every day. Like I said, I spend 10-15 minutes going through them all and kind of narrow them down. I go through all of them. Then that's how I create my watch list for the day. And then once that watch list is set in, I'm just honed in on those two for the day.
Okay.
So like this one was supposed to work out great, but it never really gave me this confirmation. As you can see, I wanted to close below all of this area, and it kind of never did it, right? But this is still in play for me. Because if you just get a big candle or candle or two to kind of just turn around and close below all of this would be a nice short opportunity, right? Like, I mean, really nice. You can put the stops above here. TP is all the way down here to the 200 EMA. So we're looking at nearly a 1 for 2, right? And this is a high probability setup if this was to play out. In fact, again, this is my highest probability setup. So I'm mainly looking for this. And then even on the TDI, right? Like we got this same kind of structure here. Market baseline just crossed below this static line here, right? And we got this outside, point for the outside structure. It's kind of coming back up. I just need this to kind of go down at this point and close below all of this. And yeah, this would be great. And again, the only other thing that we'll be looking for on this is the 4-hour confirmation, how I went through yesterday, right? So you and I spoke about where am I?
yeah.
So where am I in the structure, right? Pattern, right? Higher time frame confirmation. right? Entry signal, right? So this is pretty much what I'm waiting on to happen. Oh, whoops! Let's cancel that. So I know where I'm in the cycle. Obviously, I got my 1350 cross, so I know I'm coming into level 1 here for this to be a short. So level 1 short, right? And then I'm looking for that pattern, which is that M structure off of that 50 EMA, right? And then my higher time frame confirmation on this, I would need price to be below this 13 EMA here, right? Like I need a 4-hour close below it, right? For this to make sense for me, because otherwise this could continuously go the other way.
Yeah.
Because typically a lot of times what happens is
at the moment it looks very bullish.
Yeah.
At the moment it looks very bullish. Yeah.
Yeah. It's just playing around right now, you know, just waiting for me to step away or something, but I got my alert set.
Yeah, I mean that's the best thing to do. But yeah, you're right. You need to, like, when you set your alerts, even though it looks bullish right now, as you just said, like if it closes below 13, then it's going to give you that confirmation that what you spotted is indeed starting to play out, and then you can start to
exactly.
Yeah. So that's the. Sorry.
Yep. At that point, I will have my higher time frame confirmation, so price will be below that 13, and then on this 1-hour chart, right? Once it closes below this 13 as well, that's my entry signal. I'm all over this trade, like all over it. In fact, I'm going to leave this up here for us to see what it'll look like tomorrow. Now, obviously, this thing could just never turn around and just keep messing around and just do something like that. And of course, there's just no trade in that particular example. But, my bias is that it's going to come up here, not go too much higher than this, maybe just a little bit, but flip back over and drop. And I want to be in this ride the first time price goes to the 200. I would more than likely take my order off at the 200. Now I mentioned yesterday that this ADR, which is this average daily range, today's daily range. Let me take all of this off. This blue orange dotted line. This is pretty much my target one, but it's so close to the 200 EMA. I'm confident that it'll go there too. So I wouldn't.
Yeah, actually, it probably makes sense to take it at the higher point, right? It just increases the probability that little bit.
Yeah, I would, and that's kind of what typically would happen. If it's so close like this, though, I might just hang on to it. But I would definitely move my stop, way into profit here. So just in case it does decide to turn around, I wouldn't be missing too much of it.
Yeah. No, I wanted to ask you a question. Okay, we're looking at the Euro Aussie. Do you find that this particular pattern, the 3-leg pattern, or what do you call the strategy? It's basically a 3-leg pattern, right? It's like a consolidation breakout. 3rd leg cycles over. But anyway, the name of the strategy doesn't matter. But this particular strategy, do you find it works best on certain pairs and not so great on other pairs, or do you get the same result? Doesn't matter on which pair you trade it.
That's a great question. So majority of them, they do work out pretty similar. The only one that I have a problem with, which sounds so funny, is UJ. UJ is very funky. Like, I don't know.
It is.
I mean, my worst. Yes. Like, it's my worst performing pair. With majority of my setups. So UJ is pretty far down there. And then my second worst performing one would be AF. AF is the same way. It's pretty wicky sometimes. Like, I get wicked out a lot on it, and it's just kind of funny. So UJ and AF, USDJPY and AUDCHF are my.
You can just say Aussie Swiss. Aussie Swiss. That's what we call it, in the normal part of the world. No, I'm just joking. No, but the pairs, I mean, the pairs that would make sense is the something like the Aussie CAD. The Aussie Swiss is actually something I like to trade. I suppose it depends on the strategy you trade, but the pairs that I don't like to trade is these weird pound crosses, like the pound New Zealand dollar and the pound CAD and that kind of stuff. I stay away from those ones. The spreads are also typically much higher on those.
Yeah, maybe Euro New Zealand as well. Probably the same thing.
Yes, exactly. Yeah, no, the Euro New Zealand definitely falls into that category. So they are those ones that's why I'm asking.
Funny enough, this was the second one that I was looking at today, right? So you guys can kind of see this same exact kind of pattern here, right? So let me kind of draw it out again. It looks nearly identical, right? So you got this funky little M structure. It goes down. You missed the 200 EMA, the first pullback to the 50, and then I want to ride it down to the 200, right? The only thing that was wrong with this one was the fact that it was super ugly on the 4-hour chart because, let me delete this, because I didn't have any 4-hour confirmation, right? Like I would have wanted price to be below the 13. See how this green candle is above the 13. This red one's above the 13. This red one above the 13. This green one definitely above the 13. So this ended up being a total pass for me. But if you look at Euro AUD, right, on the 4-hour chart, you see how this candle is below the 13. So this one was much more interesting for me than the other one. So those two were on my watch list for today, but I really zoomed in on this one because this gave me my number 3, which is my higher time frame confirmation.
Okay, but like you focus on just the 4-hour, do you look for the same setups on the 1-hour time frame as well, or does it work best?
No, it's mainly based on the 4-hour chart. I'm sorry, on the 1-hour chart. I'm only looking at the 4-hour for my confirmation. Like I need it to be on the right side of the 13.
Okay, and it's just those two time frames you look at, right? Just the 1-hour and the 4-hour.
Yes, for the most part. Okay. Every now and then, like I can see bounce trades happening on the 15-minute, right? So if I was to scroll this down on the 15-minute, it's kind of interesting to say, but my 1-hour trade, which would be this one, just how you mentioned as well, it's fractional. Like this looks the same. Like this is the same setup. You got this top here, this 1350 cross, right? Let me just go ahead and draw it out. This 1350 cross, right? And then I'm looking for this M structure, right? So we got this funny looking M coming on down, right? This same thing would happen on the 4-hour chart. I mean, on the 15-minute chart. I'm looking for the same thing. So my 1-hour and my 15-minute are pretty identical. I do, however, like my 1-hour close because a setup can happen on the 15-minute, but if there's no 1-hour confirmation, it tends to go the other way sometimes. So I'd much rather prefer to actually execute it on the 1-hour chart.
Yeah, that makes sense. That makes sense. And no, I just thought you like trade just on the 4 hours. Like that must be frustrating. So that's a long wait. You know,
that was just for confirmation. Like, I'm mainly trading on a 1-hour chart.
Okay. All right. Igor, I don't know if you have if you want to share your charts, or maybe
yes, I just want one thing to share right now because Michael said me one beautiful thing that I want just share with you. Okay, I will just to find this screen here, just to open. I hope that you will see soon. It's this chart. I just took the COT report for futures and put on MetaTrader chart. Just it's a little bit crazy, but the best thing to see what's happened here. So I want to tell two things about US dollar Japanese yen. First, I have a huge problem with US dollar Japanese yen when I use on 30-minute chart or 1-hour chart. The problem is relative strength index indicator that I use. When we have for example, strong trend for euro dollar and British pound dollar, we can see that, for example, 40 relative strength index on the 30-minute chart holds the trend without any problem, usually. Okay, sometimes we can see on British pound dollar some swings, but usually 40 is very strong. On US dollar Japanese yen, there's no rules. Sometimes we can have crazy breakouts and everything can be crazy. But there is one good thing about US dollar Japanese yen. It's good for swing trading. And what I'm looking right now, I'm watching what are on futures big speculators do. So big dogs, what they're doing. Currently, the large speculators, I hope that you can see right now that I'm just showing the moment this is really huge. I can tell really huge moment, because large speculators plan to sell the yen in the future. It not be today, in maybe this week, next week, I don't know, because it's a swing trade, it's a fundamentals and everything. But we have a very bad news for Japanese economy. We have special moment for the US stock market, Japanese market. A lot of things right now are around the fundamentals. I read a lot of news right now about that. But what I can see, if someone take, for example, US dollar Japanese yen buy order, there is a probability to have good risk reward ratio in the future, just based on the COT report data. Of course, right now it's not the excellent time for that, but I'm monitoring. We started one push last 2 days bullish on the US dollar Japanese yen. Of course, we are in the bearish channel right now, and as we can see, I just put it like just to see a little bit better. Of course, you're still in this channel. I would like to see to break this channel and go upside, of course. But what I can tell right now, the COT report showing that in the next weeks, it's very good, a long-term buy order for US dollar Japanese yen. And I can tell based on my experience that COT report for especially for US dollar Japanese yen is very good, especially in my case, and in the past I had a good trades. For example, this trade last summer, so I figure out very strong upside moment here, and there was intervention in the Japanese yen economy. And after the news, if you see this candle here, I will just this candle here. In this moment, on all news, there was a news that we have a bank intervention in Japan, and after that, I made a sell order, put the stop loss on the.
But what do you mean when you say bank intervention? What do you mean, like an interest rate? What do you mean bank intervention?
No, it was just the news that Japanese government decide to put money a little bit to support US dollar Japanese yen, just in that way. So we have every single currency. We have sometimes that the government defends the currency, and we have the problem. I will just show maybe the larger time frame just to see that. So look this. We have a strong bullish moment. Japanese yen was so weak, and last summer. They first decide to do with interest rate, but after that they decide to do bank intervention. They started to buying, selling, etc., just to support the currency. And when I did that, when I saw the news, I entered into the trade, and I think I closed here. It could much better to be, but I closed here. It was a very good trade. Unfortunately, I risked so small amount of money there, but I think that there are very good trades. Sometimes, for example, Bank of England, they do very often that bank intervention. We know that intervention when they do with Soros when he he conquered the market in 1990. However, for example, what I'm looking for on daily chart, if we see, for example, that a relative strength index indicator is below 20, and I read that there is a bank intervention in the news, in that moment I just
so are you like so you're more like a fundamental trader? Is that right? Like,
I'm not, because what I'm doing, 80-90% of my trades on 30-minute charts. I'm in one daily session. I'm trading. However, I have accounts and where I test that swing trade sometimes, because I analyze a lot fundamentals and I want to take something from that. And I know when I risk a smaller number of, a few mini lots or something like that, I know that I can sometimes achieve a few hundred pips. And it's a really beautiful trade, because if you enter into right moment and you ride the good moment, it's really beautiful. I feel comfortable when I do that.
No, I agree when it takes off. But the thing with, like, when you try to catch these bigger waves in Forex especially, is your success rate is much lower, right? But it's not a problem. It is much lower. Like, as you try to increase your risk reward ratios, your success rate comes. That's just how it works. Like, if you decrease decrease your risk reward ratio, say from a 1 to 5, a 1 to 6, or whatever, down to a 1 to 1.5, your success rate goes up significantly. Okay, given the other factor still plays a big role. You need to still gather buyers and when do you enter and the whole strategy. But I'm just like saying, like, because it's difficult. It's very, very difficult to catch a big trend right when it's happening. Okay.
Yes.
So that's the first thing, and the second thing is it doesn't happen very often when you get right. Those big, the big moves. It doesn't happen very often. So you can see on this chart there was a number. This is the daily time frame, right?
Yes. Sorry.
This is the thing. So now, if you look at this chart you're showing here, because you're showing now that this, well, that's just it's not like, that's not even an ascending triangle. That's just what's that, like a?
Okay, I will just
some sort of triangle.
To find you're thinking about US dollar Japanese yen. You're thinking about that?
No, the one you're showing right now. If you just zoom in
about US dollar, this is British pound dollar, for example.
Yeah, I don't care what the currency is. We're just looking at the actual chart. If you look at this particular pattern, okay, you just drew that.
Okay, okay, yes, I put the triangular pattern here on the 1 hour chart, for example. I just put it there just to watch that triangle because I have several dots, like you see.
Yeah.
Yes, this is the triangle pattern, for example, and I'm just watching what will be here. I would like to see I would like to see a short trade. I would like to see that price going below 1.291 and then to maybe reach 1.27 area again. This is my probably some scenario that I have in my head. Yes, nothing special, of course. But I want to tell you about swing trades. What is the catch, for example? And I will try to do that here. If that's possible to see very good. So on British pound dollar, for example, if I use, for example, draw trend lines on the relative strength index indicator, I will just show you here this trend line here, and you can see when we made a breakout after, for example, from 1st October up to middle January of 2025, it's for several months, we have a bearish trend. And it was a huge bearish trend. And then we broke this relative strength index trend line. Look what's happened. And this has happened very, very often because I realized that euro dollar and British pound dollar, we have waves of 4 months upside, 4 months, bearish side, etc. Sometimes the legs are huge, sometimes are not so good. But I realized
twice a year. It happens twice every 4 months. Twice.
Yes,
no, I'm just saying. No.
Yes, you're right. Yes, we will have 2, maybe 3 trades for British pound dollar if I do that. But imagine, for example, that you entered here somewhere. This is the 1.31 level, and you keep it, for example, up to here, it's almost 800 pips. So if you think a little bit, of course, it's one trade, and after
but I mean, how would you? I understand what you're saying. It's nice to point at a chart and say, look, he could have made 800 points. But my question would be, like, what would make you take that short? What are you looking at to make you say, you know what? Look at this, look at that. Now is a good time to go short, and look at the result. Look how far it dropped.
For example, one of the triggers can be relative strength index breakout on a daily chart. This is of course, I don't watch only that, but for example, look here. This is the breakout point. So I would enter here just because of the breakout. Plus, I watch the COT report to see is the risk-reward ratio is good. So if I see that large speculators was on the top and they're little bit by little bit decide to become the sellers, I'm ready to enter into that trade on that way. Plus, I'm watching the fundamentals. Here we have fundamentals, very good fundamentals for US dollar. So I have free triggers there. Good fundamentals for US dollar, breakout relative strength index, and COT report. And this was a trigger for this trade. And then
would you place your risk right at the top or just at the candle?
Yes, right on the top. I just put it right on the top here, and I wait. You're right. Sometimes my winning rate is not good. I tested this couple years, and there was the worst year I had a 40% winning rate, and the best year I had a little bit above 60%. So
the 40% is good.
Yeah,
40, what's your average risk reward ratio?
The average risk reward ratio was, I think, 1 to 2.2, something like that. It was good. It was good. I think in that year 40%. But when you have a trade and you wait a couple months and nothing happened with that trade on your account, it's really psychologically it's different. You just not feel very well after that. Even you don't lose money, even you have a good risk reward, and actually because you wait too much and after that nothing. Of course, I have multiple accounts when I trade. Majority of them I trade, like I said, on 30 minutes, and it's different. But when I use that accounts for the swing trades, it's really boring. I need to say it's really boring for trading. And but my goal why I'm doing that is I listen a lot of traders, and how you older and older you push yourself to be in the way to trade on the daily, weekly charts, position trades, such a thing, because you will have more time for yourself when you're older person. So this is why I'm doing.
Look, I mean, let me. The reason why I ask you, let me just quickly I'll do quickly a summary for this month so far.
Okay, let me just stop sharing.
And then I'm gonna have to take a screenshot. Obviously, just for need to get rid of branding and things like that. So let me just quickly take a screenshot. Okay. All right. So let me quickly show you. It's just to show you my results for this month and for March on a 50K account. You'll see, just let me know when you can see. Okay, you can see myself. Okay. So yeah. See, this is for March. So 59 trades. My success rate, as I said, is between 50 and 60%. So I'm now over the last 59 trades, 54% is the success rate. The risk reward ratio is last week it was much closer to a 1 to 2, but now for the whole month, you can see the average losing trade is 525, which is 1% on a 50K account, and then 885. It's what, 1 to 1.8, something like that. So, you don't need a high success rate, but what I'm saying is, like, if I now, and I had a 5% drawdown, I had like a really tough streak. I had 3 losers in a row. And then the next day I started my trading day with another 2 losses.
Damn.
Like, but that's fine. And some people feel very uncomfortable with the 5% drawdown. Well, all you do is you just half the risk.
Well, the only reason that it feels like that is because with the prop firms, you can only do about 6% drawdown.
Yeah, well, it depends. Well, if you can do, no, I mean, like, or 10%. But all you do in that case is you just half the risk. It's not a
right.
Obviously,
right.
But this is I'm at 14,000 net. That's 28%. In tomorrow will be 2 weeks, because this is only for March. So like 28, even if you half the risk, then that will give you a 2.5% drawdown with a 14% with a 14% return. But the reason why I'm showing you this is just to make a point. If you are going to go for higher risk reward ratios, your risk reward ratio this is crucial. This is the most important stat, and not your profitable trades. You must make more compared to what you lose. That's the first thing. And the second thing is, like, obviously the percentage of your winning trades does play a role, but a lot of people just focus just on that. They just focus on, like, I want a high win rate of 70 or 80%. It's like, that's, I mean, or, in the past when I used to do coaching, people will come to me and say, like, yeah, what's your win rate? I'm like, it's the wrong question.
Right.
It's the wrong question. I'll give you an answer, and I say, well, it's between 50 and 60. Not interested, right? Like, I want something higher. It's like, well, obviously you don't know anything about trading, because that stat by itself means nothing. It means nothing. You need it's a combination of your risk reward ratio, which your reward must be bigger than your risk, and then your win rate comes in, and those combined will tell you whether your trend is going to go up over time or not. That is why if I see a setup and I see it's a 1-to-1, I don't take it, because I know, like, over a number of trades it's going to hurt me. It's going to hurt me, right? And this week was actually a bit tough. This is actually the peak of that was how I ended last week, and this week was a bit more difficult, but I broke new highs at least. So, I'm happy with that. But does that make sense, Igor?
Yes, absolutely. I support you 100%, because even on my short-term account, I'm around 50%. My accuracy is 50%. Nothing special there, but of course my risk-reward ratio is a little bit better. But I just want to add one thing. What's very important, especially in my trading style. It's very important that every single day when I start trading for any asset that I want to trade, I need to have a right bias. Of course, it's impossible to have always right bias, but I figure out one statistical thing related to my trading, and this is it. When I create a bullish bearish validation point, and I say, okay, today I'm bullish above this level, bearish below this level. And then I watch what's happened that day, how many times I was right about trend, just only trend, nothing about my trades. I realized that my bias should be 70% of the time right if I want to keep my winning ratio around 50%. Because if my bias is wrong, there is a problem. I can have 4 and 5 trades in a row, losing trades. And this is the psychological level is really, really dangerous after that. So
yeah, for sure. Yeah, that I agree with. Your bias, you need to be more accurate with that than but it will not reflect in your win rate in your trading.
Yes.
But your bias is definitely important. And and that's where what have I done now? That's where all these these multiple time frame analysis and things like that come in. You need to you need to have a kind of process, like, how am I going to determine my bias? It's a very, very important question to answer. like how do I determine my bias? And look at this like S2. Do you see how the S2 as well as the pivot of the point of control?
Yes.
How it just bounced up there. You've got a bullish on the 15, but nothing on the other two. So I would not have been interested in that anyway. Just at a quick glance. Maybe actually you can stack probabilities. S2 is one bullish candle on the 15 and a point of control. And there's a distance, there's quite a nice gap between where you are right now and that resistance area. But for me, it just kind of feels a bit against what my overall bias is. Does that make sense? So it's not like an A+ setup.
Yes, right.
But yeah, so that's, I just wanted to, just you can go back to your charts. But the reason why I asked you, if you could just share that screen again.
Okay.
Hey, got a bite.
Do you see?
Yeah, we can see it.
Excellent.
Yeah.
So as you can see right now, I have a bullish bias, but I cannot trade here because I don't feel comfortable neither for bullish, neither for bearish. So something should happen here. We need to go either upside, either downside. So if I need to choose, I would like to see, like I said, bearish bias here. But it's really hard to say. And the problem here is that we are around 70 relative strength index. We're really bullish, and it's a level where we can make mistakes easily in trading. So
what would you like? What would you ideally like to see? Like,
here.
what would your do you understand what I mean? Like, what's your plan? It's like, would you like to see a break below the lowest point of that triangle and price wise, like not necessarily just breaking the trend? That maybe not be enough because you still got that low.
Yes.
Would you like to see that low to break, and then that will give you confirmation of a bias, or what would you say?
Yes, what I wanted to do here is first, I would like to see that price just breaks this triangle, and I will never take the trade in that moment. So I will just want to see see the break, and then what I want to see is the reaction of the second day of the tomorrow. So, for example, for British pound dollar tomorrow, we have very bad news related to British pound GDP. It was a 0.4%. Now we expect 0.1%. And I hope that market should react on that because GDP will be, we expect that the bad news there. And the next thing, what I want to see is that a market will again start to go up. I know that if we break this triangle. But in one moment, I want to see, actually what I want to see is the Asia session. And I'm talking about that strategy very often. I will just show for today, for example. This was the first hour of trading today, around 1.2960, for example. And what's happened during every single morning, every single day, there is some algorithm that works during the British time, which works very simple. That algorithm needs to touch the first hour low and the first hour high during the Euro session, and the both levels need to be touched. If we touch one level and another level we don't touch, in some moment, usually during the British Open, we will touch that level. So what I would like to see in that case is this. I want to see some push upside during the Asia session. And after that, I want to see which that high is. During the market open tomorrow and during the news, we will see the news. We will have some spike. We will touch the Asia high, and I want to sell Asia high. So my usually strategy is if I'm bearish, I want to sell Asia high. If I'm bullish, I want to buy Asia low. And this is the simple strategy that they want to accomplish. And of course, that strategy needs to align with the relative strength index trend line. So trend line should not be broken. This is another very important rule. So it should be bearish, not broken. And if that two conditions met, I'm ready to go in action. And what
so I'm gonna add this to it. That's actually very interesting, because what I'm doing, right, when I'm deciding to enter my positions as well on that 1 hour chart, it's in essence the same thing. Like, I want them, if I'm going short, I want them to come out of Asia, and I want them to, what I would call, hit the stops high, right? I want them to go above the Asia box, grab some of those orders, basically activate them long, and then go short. And vice versa. If I'm trying to go long, when it comes out of Asia, I want them to go below Asia low, right? Like around 12, 1 Eastern, whatever time they may be. But in essence, I call it hitting the stops low. So I want them to hit the stops low. And then once it comes back around and confirms, which is my close above the 13, that's when I'll buy it going long. So that's kind of like the same thing.
And just to add, your strategy is very good, because you just show that you avoid to trade around the peaks. So, for example, if we are whole Asia session, we are on high, and in the morning we are around the high, but there's no pullbacks, nothing. We are on the peak. I will not trade, because that peak is very dangerous. So when you have a resistance, for example, and price just oscillate around resistance, like trying to push above that, but just trying, it's very dangerous, because sometimes falls break out and just break out above the resistance. So this is the way that I'm like you, Michael. I try to avoid trading on peaks when we have a price around resistance and nothing happens. So very, very, very similar strategies with different indicators. Yes.
Right.
So, but just a quick question, Igor. If you look at that trend line that you drew on your chart, right?
Okay.
The longer one, you've identified that low. If you look just prior to that low, there are two other lows that you know, like if you
like this low, 1.2.
No. Sorry, like further up the chart.
This low, 1.29.
No, like look at where you started to draw the trend line, the starting point. Go to your right.
Here.
The next pivot.
Here.
The next low.
Here somewhere.
No, the next low. Like you started the trend line at a low.
Okay.
Yeah, and then so find the next low.
Here.
Yeah, and where's the next low?
Next low is after that here. If you see that, I cannot just. I think that the
look.
Most
my point is, like, I'm trying. Sorry,
okay.
I'm probably not explaining. Like, if you look at where you've connected 2 points to draw a trend line.
Okay.
Yeah. So what I'm saying is, just above the second low where it touched, where you draw the trend line. If you look at the lows before that.
Okay.
You know, it's like, would you not say that's the trend line?
Yes, but what I want to tell you is this trend line is not so important for me. So important in trading. I just watch that. Why? I will just show why. Because a lot of traders will use this kind of charts, for example, and now when they draw a trend line, it will be a little bit different, as you can see.
Yeah, that's what I'm saying. Like, when you draw trend lines, it can be very objective.
Someone will use close prices, someone will use a low high on the wick. So it's different. However, it's just like I said, it will be 5, 6, 7 pips up, down. It's not so important for me. For me, just important to watch as a structure. what's happened with this structure, where we are now, or something like that. So sometimes I will just create a Fibonacci retracement here and watch what will happen. But the question here is more what will be here with this daily candle. We are bearish candle. We are just in some. I think it will be bearish candle here, and tomorrow we have a bad news for British pound dollar. So this is my expectation, that I would like to see some kind of the pullback. But I know, because of this structure that is very strong bullish, I know that a price will not go down and make a 400 or 500 pips or something like that. When we have this kind of structure, we will have some oscillating price. It will be 50, 60 pips down, 100 pips, then upside and down. It will be crazy. And of course, I'm watching in the same time. I will just show you what I'm watching. I'm watching the COT report too. And if you see, for example, I will just show right now, look this, large speculators and the small ones and everything. It's so small number. So we are not even in the beginning what can happen. It's not good for the swing trade right now. If you want to sell British pound dollar, if you want to buy British pound dollar, it's not good, neither for buyers, neither for sellers, based on the COT report. So, so this is another thing that I'm watching. So British pound dollar is excellent right now only for these intraday sessions, something like to catch on the 30-minute charts, 1 hour chart, to catch some high, to sell some high, to buy some low in some moment. But it's not for swing trades. I really don't know what will happen with British pound dollar right now, especially when we hit this 70 on relative strength index. And I know there is a lot of room for upside, but all these data, all these fundamentals, all these COT report, so it's so mixed for me right now. I don't have a bias on the long term for British pound dollar.
Okay. All right. Michael, are you? It looks like you. I think your mic or your camera is frozen.
It is.
Oh, there you are. You're back. Okay.
Okay.
You can just. Sorry if you don't mind sharing your screen. I just wanted to get your thoughts on the pound US dollar.
Yeah. So pound. Let me get to it.
Based on your strategy, obviously everybody trades different, so it will be. It's always interesting to get different inputs. Yeah. Okay. Well, you already showed that one.
Yeah, I'm just saying. See how interesting this is, right? Because this is starting to try to attempt to make that second leg to down for the short. So.
Yeah.
I'm just watching this one, but yeah, the pound dollar. Let me get to it. So cool. So for me, on pound dollar, I'm looking for more of something like. Yeah, so this thing is super high, right? So for me, what I'm looking for is, I'm not interested in this at all right now. I'm looking for, I would be interested in something like this. How this M is coming up here. I will want this 1350 EMA to cross, just how I kind of showed you guys on the last one. I want this to come down, miss the 200 EMA, come back and touch that first hit to the 50, and then short. That's what I'll be interested in. Simultaneously, on my TDI, the market baseline, you see how it's above the static right now. I want this to come down and start going below this static, right? That's what it will look like for me. And again, I will be interested in. Oops. Okay. Man, this thing is okay. Here it is. Yeah, I will be interested in the move right here, right? Just how I always draw that same structure. This for me right now is nothing. Like this isn't anything for me.
That's your main
same thing. Yeah. I'm always just looking for this same exact
okay, but
structure.
like you
so
both
I wouldn't
agree
be interested
that.
In long.
Sorry. Sorry, I think there's a little delay between you and me, Michael. So we tend to talk over each other. Sorry, carry on.
Yeah, I was just saying I wouldn't be interested in this at all. It's not long or short for me. But if this was to set up this way, I would be looking for shorts if it broke this area, right? And then kind of retested the area here. Yes. Then I would be interested in shorts there, riding it to the 200 EMA. But for right now, this is nothing for me. It's just a total pass.
Yeah, I think, Igor, you agree, right? You also mentioned
absolutely.
The
I would like that trade to happen. Yes.
Yeah.
This will be, for example, Asia high. For example, to sell Asia high. This would be beautiful.
Yeah.
That's exactly right.
That's exactly what you said. Yeah. Mm-hmm. Yeah. So okay. Well, but is there anything else
that looks shockingly close, right? This looks shockingly close to what we was already drawing up. This looks just like this.
It does.
This is the same exact move.
But they both. Right. The other one is the pound. Yeah.
Yeah, this is much further in the actual process already, obviously, because we got this 1350 cross, right? So this is when this 1350 crosses to the downside this way, this locks in this pattern for me that this is short. The next thing I'm looking for, so my bias is short, but the next thing I would be looking for, obviously, is that first pullback to the 50 EMA with a nice pattern, right? So for me, the pattern would be some type of bounce or M structure off this 50 EMA. With a nice close below this 13, right?
Yeah,
and then if we go back to GU, this is close, but it just hasn't really done it yet. Like it's pretty far away, right? Like there's no 1350 cross just yet, but it looked like it's coming. That's why the market baseline is starting to slant down. That's why the EMAs are actually touching each other now. Yeah, I'm looking for that break below all of this, that run. And a nice little pullback to this area, I would be all over this trade.
Yeah, that's very similar to how I approach my entries on the 1 minute, isn't it? Especially when it comes to the breakout areas. Mm-hmm. If it breaks out, I don't chase the breakout.
No, the breakout. The breakout. I don't know. Is like, and again, it's one of those things where it's like, well, what if it breaks out and never pulls back? Well, then I just didn't have a trade for that day.
Yeah, that's what happened yesterday, right? But there was a reason why I didn't enter the trade, because if you just it depends on how it approaches the breakout area. Mm-hmm. So if it just crashes through and you look to your just immediate the price action before that, and you can see that it traveled there's quite a number of bearish bars, for example, to the point where it broke the support level, that is not a good time to short, because it's like you missed the move basically, and now you're breaking a support level, and it's not a good time to enter. You're much better off to just wait for to break a little bit further out and then pull back and then give you a nice little a pivot where you can really control your risk, which is going to be much tighter, and then give you a risk reward that's going to be bigger than a 1-to-1. That is so you have a very similar approach, and I think Igor, you agree with that as well, right?
Of course, 100%. I just want to add something. Yesterday, Sam decided to take a British pound dollar for trading on futures, and he used the volume profiles. He put volume profiles, find the low volume gaps, put all important price levels there, and every single price level that he put on the chart, exactly same as mine. Completely different strategy, different indicators, but everything aligned. Even my stop loss for my trading was exactly the same, using the volume profiles that I didn't use, and exactly the same thing. So I see that a lot of different strategies, but on the end, we are on the same side.
Mm-hmm. Yeah, for sure. I think, but this is where the bias comes in.
Yes.
So your bias is really, really important. And there I share screen. I don't know why. But yeah, your bias is very important, because that is the starting point, and from that point onwards, if my bias is long, your bias is short, that is thinking is going to split.
Yes.
Right. I was thinking it's going to split into different directions, and now I will find reasons, or not forcing trades. That's not what I'm saying. But I'm going to find reasons that or stack probabilities that's in line with my bias. And you are going to do the same, but your bias is the opposite. So you're going to stack probabilities that lines up with your bias. But if your bias is wrong, then everything else you do from that point is not going to work, or is highly unlikely to work.
Yes.
So yeah, but Igor, I agree with you. Like, so, you know, like we all have different, you know, ways of trading and so on, but they are the one thing that's consistent across. Doesn't matter what you trade is key levels, like things like support, resistance, and breaking out of support. Like all the strategies relies on something like that. Like it needs to break a support level, or it needs to break resistance, and then from that moment, you know the thinking can be slightly different. Like I wanted to retest, or you know, but it's you know that I would say support and resistance is at least 50%. Makes up at least 50%, if not more, of like most strategies.
Right.
So, you know, so even at like a FIP level, you know, that's a resistance level, the 61.8. But anyway,
I agree.
all right, guys. Yeah, I don't know if you have any final thoughts, but that's it from my side.
I'll say, as we all can agree, there's a million ways to skin a cat when it comes to this Forex.
Yeah,
market,
definitely,
right?
absolutely. That I will definitely agree with.
Yes.
All right, guys. We're out of time, but it was really nice to talk to you, Michael, again, and Igor. It was nice to talk to you again. Have a great day.
See you soon.
Speak soon. Cheers. Cheers.
Right.
Bye-bye.
Bye-bye.